Okay. All right, so we are live, guys. Give me a second. Let me get this everything set up here. Where's my screen here? And then I want to just basically get into it. A lot of people have been asking questions, a lot of fear in the market right now. And I thought I'd chime in, at least share my opinion on it and how I'm going to play it. Now, first of all, I want to say apologies. I was supposed to be streaming on Friday. I just got this bad boy in, okay? This really amazing microphone, which actually does justice in doing, the voice, some radio type of sounds, okay? This is an amazing mic. Shout out to AKG for this thing. They didn't sponsor the video. They didn't do anything like that. I bought this out of my own money, okay? And I'm glad I did, because for the last few months, I've been using a USB mic. I'm not going to throw anybody under the bus, but it's been kind of hit and miss. And I needed a microphone that was going to do justice. I have a really good camera, two of them. In fact, one of them's not plugged in just yet. That's soon to come. But anyways, the mic needed some work. So I got this thing in, and I'm just in love with the sound. It does an amazing voice, has that real radio quality to it. And anyways, on Friday, got it in, had to set it up. That took a little bit of time. That cut into normally what I was going to do, which is actually go ahead and trade for that last hour. Or actually, I'm always trading. I'm always, in the markets. But, you guys, if you've been following the channel, you know that basically hey, what's up, Sparrow? This is a late night stream. But anyways, look, on Friday, I was supposed to get on. But, when I was trying to plug this in, and then, of course, had to take my daughter out for ice cream, had everything just pretty much happened right when I'm in a live stream. So I got to fix that. But look, I said I would be on when the market, before the market not before the market, but kind of like a pre-market breakdown for what I'm expecting for the week and all of that stuff, what I'm looking at. How I'm looking at the markets, what I'm thinking is going to happen. So that's what I wanted to kind of kick that off with this stream. It's a late night stream. And guys, I might actually have to do these late night streams just because it seems to work best with my schedule. So it's like 10 o'clock Texas time. So, this may be the regular Monday night evening stream. So it's going to be like a late night stream. I used to be a night owl, so this might kind of kick me back into that mode. But anyways, so I'm here, I'm streaming. I'm still going to be on again on Friday. I'll be trading live with you guys from 3 o'clock to market close. So shout out to Sparrow for coming into the room. Appreciate you, Sparrow. Thank you so much. Let's just get into it. Look, where do we start with all this? The markets, there's all kinds of war talk right now, okay? And blaming it on Russia, it's always Russia's fault. Okay. They need to find a scapegoat right now because, it's everybody's fault except Jay Powell's, except the Fed, except the leadership. It's always, somebody's fault. And so they're trying to set up like a scapegoat. Now, I'm not trying to downplay what's going on with Russia. I don't want to do that. Who knows? Hopefully nothing happens because, that's a whole, that's Pandora's box. Okay. But nonetheless, they're trying to find reasons to kind of, when the market does, if it starts breaking down, which I think it is going to do, they're going to need to have everybody to point a finger at except themselves. Now, for those of you who know what the plunger team is, okay, if you don't know what the plunger team is, read a little bit up about them. Okay, they basically bail out the market. They come in here and they buy the market up. Okay, they just print money and they keep the market artificially high. They financially engineer the market. They've been coming in with like 30 to 50 billion dollars a day, buying up stocks through stock buybacks, and all kinds of other different ways. They know that if the low breaks, okay, right now, and I'll get into the chart in a minute, but I just kind of want to have a little, just kind of talking and expressing what's on my mind with you guys, and we'll get into the charts. But here's the thing. They know that if the market breaks the lows that it's had in January, we're going to go head first into a serious crash. And they know that. They're panicking right now. Can they hold the market up? That's a big question. I don't think that they can do it. But if they can, they're basically going to, the tests are not at the bottom. You know, a lot of people are like, oh, we're going to test the lows. The tests are not at the lows, in my opinion. Okay, the tests are at the highs, because you got a market right now that's broke the trend. It's starting to get into a downtrend. You got lower highs that are already forming, and so you know what are they doing? We want to see, what I want to see is a market rally up. Okay, and I'll pull up the charts in a second, but I want to see the market rally and fail. That's what I'm looking for. Okay, the market has been failing since January, and if you look at when they failed the market out to new highs, they you know they failed bad. The whole month has been brutal. Okay, and that's when they came out heavy and they stopped the bleeding. But again, the market has, you know, just been failing. It's failed twice. When I pull up the charts, we'll kind of mark where the spiders have been failing. But it did so twice. Okay, so what I want to see is the market try to go for it again and get that third failure at the highs. Now, if they can break the high, if they actually get enough buyers and they rig the market with enough stock buybacks, it's possible that they could take the market to new highs and push the market back into a trend. They possibly can do that. So what's going to happen with the market is we got two scenarios that are setting up right now. Okay, and let's just let me go ahead and get into the chart. Let's just bring that up, because I'm just kind of having a face-to-face with you. Guys, for those of you who don't know, all my Twitch followers, I'm now streaming live on YouTube. So this is kind of serving as a YouTube post. So when I have these video posts, you know, they're going to be more of this, you know, straight, you know, face-to-face or whatever you want to call it, kind of setup. But let me go ahead and get into the chart so that you can see exactly what I'm talking about here. All right, so here we go. You guys can see that. And again, shout out to those of you watching on Twitch for this late night stream. Sparrow, who's always showing me so much love. For those of you on Twitch, definitely check her out. I will put a post. Oh, I heard that the microphone pop. Okay, anyways, I'll put a post up there so that you guys can follow her, like a little thing in the chat. Let me get into that. Oh, 1 second. All right, so just give me a second here, guys. I want to get this thing rolling, and I gotta fire up the chat to make sure that it goes into the Twitch. So in case you guys do have any questions or whatever, or want to put any links, I can do so. All right, so here we go. All right, we'll just leave it at that. I have to set that up later. But okay, so you guys can see here what I'm looking at. And let's get this little thing going out. All right, so you see this here. Okay, this is the lows that I'm talking about when it hit here, and you saw them come in and rescue the market and basically try to get it back up over that 200-day moving average. This was the first failure right here. Okay, that was your first failure. And then you had a second failure, which was basically right here. Let's move this right here so you can see it a little bit better. Okay. So you have your first right here. You have your second right here. Now, like I said, I want to see them rally this thing up right about here and then a fail. And if it can do that, that's just going to be really good for those of you who are short. For those of you who are long, it's going to be brutal. Hopefully, you have some stops in place, because it could get ugly. If it fails down here and comes down, again, this is not the test. I don't think it's a test. I think the test is at these highs. So if you let's clear this out. If you rewind back here, this is when we started breaking the first time. Okay, and this is what it was about like September, when we were breaking. And I mean, if you just rewind this thing all the way back, it's been like I said, it's been on an uptrend in previous videos. It's been on a beautiful uptrend. And 1 second, guys, let me see here. Okay. So, as they say, the trend is your friend. Okay. And I'm a big trend player. Okay. The trend is where you make a ton of money. Okay. When you're inside this trend here, rewind it here. When you are inside, oh, that's the wrong one. I'm going to get better. I'm still a little bit rusty at this. But let's see here. Here we go. Trend line. So all right. So guys, when you're in a trend like this, that's where you're making a ton of money. Okay. When you're inside, you're buying, you're making your money right there. Okay. And if it's a downtrend, it's the opposite. You're making money on the short side. Okay. The trend is where the real fat, big money is made. Okay. Because you can stay in there for months. You can stay in there for, as long as that trend goes, even for years. Okay. If it's going for years, like the S&P has been kind of just, you see it just kind of going up. But as long as it's in that trend, that's where you really, that's the butter zone. Okay. And as long as those pullbacks, you can see here, you get little pullbacks, right? As long as the pullbacks are higher than the last pullback. Okay. So you have a pullback right here. The market continues it moves up, it comes down, and you see here this pullback, right? But it's higher than the previous pullback of the previous one. And again, it moves up, comes back down, pull back, and it's higher. Okay. So as long as those pullbacks are higher than the last one, you're basically on your way. Okay. Now what happened is basically we broke. Okay. This right here was one of the breaks back in September 21. And now we're getting another break. Okay. And this is what you have, what happens when you have a serious problem on your hands. Okay. Because what's happening is the market sentiment is gone. Now, you guys, I don't know if you know what I mean when I say the market sentiment. Okay, some of you guys are just kind of new to the market and trading, investing, whatever it is. But when you heard CNBC out, and they were always pumping the buy and the dip, that's market sentiment. Okay, that's when you have, again, back in this trend here. Okay. And when you're in that trend and everyone is buying, you got market sentiment. Okay. You have buyers sentiment. Everybody is buying. But once the trend actually breaks, which is what you get down in here, okay, tries to get back up, and then you get another failure. Even if the mantra is there, the trend is no longer there anymore. So that buy on the dip is no longer working as it was before when you were in a trend. The sentiment is gone. And that's what we have right here after we broke the trend. That's why people are getting whipsawed all over the place. Okay. They're just, they don't know what to do because we're out of trend. Okay. So people, especially people who've just been buying and making money, easy. That's not the case anymore. Nobody knows what to do. So if you look at this mess, I mean, it's a breakdown of market sentiment. You got two choices when this happens. You either wait for them to manipulate the market to the upside, and then you get back in there and trade, because the whole market is moving up. So even if you make a mistake, if you're long, if you're buying it, the market is kind of carrying you. It's kind of like a sailboat. The wind is kind of blowing you that way, because you got a trend that's taking care of you. Now, right now, we don't have that. So again, you have two options. You sit on the sidelines, or you wait until they, again, manipulate it to the upside. You got Powell out there saying something like let's say he comes out and says that they're not going to cut rates 7 times. Maybe they're only going to cut once or twice, or they announce that they're not going to sell, $60 billion worth of treasuries. They do something like that. If he does that, if Powell has the balls to come out and actually do this, then what he's going to do he's going to make a killing for the wealthy, for everybody who's heavy in the market. The richest people are going to make some serious money. So let me tell you something. If you print money, you do it for one reason. A lot of people don't understand this, but you print money to create wealth for the wealthy. That's it. That's the whole purpose and objective for printing more money. You get stock buybacks, you get inflated asset prices, and who owns assets? Who owns real estate? Who owns stocks? The wealthy. So wealthy always benefit from printing. So if they decide that they're not going to aggressively raise the rates, that means that they're going to try to get the market back into the trend. And if they push the market back into that uptrend again, then we're going to make a ton of money in the market, because it's back again in an uptrend. And the market will definitely see higher prices. Okay, so that's option one. Option two is that they decide not to interfere, and instead, let the market be a free market, which these guys are not very good at doing. By the way, they can't do that. Okay, they've been engineering these markets for so long. It's very hard for them to just stand back and let the market be a free market. We don't have a free market. Okay, don't be fooled. So, if they decide, though, that they're not going to financially engineer the market, then that means we could break. We will break, and probably in a very serious market crash. Okay, we could probably have the biggest crash that we've ever seen, this generation ever had. Okay, the question is, are they going to rig this market to move it back up with reverse cutting, or if they're going to let the market be a free market and crash and correct? Either way, we're making money. Okay, either way, you can still make money it doesn't matter what direction the market goes. So the problem is that for those of you who are new to the market, you're getting caught. You're no longer trading in. You're no longer trading in an environment that was in an uptrend. Okay, so you're getting, kind of like just whipsawed all around like this. You can't be buying stocks the way that you were buying back stocks back when you had that trend, because again, I tell you, that market sentiment is gone. The trend is gone. You can't just be doing what you were doing. David, forget his name. David Taper, one of the big hedge funds guys. He said, once the Fed started printing, he said, buy blindly, just buy whatever, because the whole market was just kind of, that's what happens when they're pumping money. You got the Fed basically carrying the market up. Okay, you can't do that anymore. Okay, you can't buy something and expect that the market is going to do what it was doing back in May, back in August. The trend has gone. The trend is broken. So if you're buying right here and you're not an experienced trader, you're having a hell of a time, because you're buying outside of a trend. You have to wait. You have to be patient. Okay, you got to wait for the market to show you if it's going to get back into an uptrend, or if it's going to go head first into a crash. Now, again, I have the spiders right here, and if you again, you could just see it. Okay, it's having a really tough time. It's already broken down through the 50, and it hasn't been over the 50 in already a month. Okay, if we switch over to the QQQs. The QQQ is pretty much the same story. Okay, this is actually the worst of the bunch, though. Okay, the QQQs. And if you see the lows that we have going on in the Qs, that's right here. Okay, this is where they came in and they rescued the market. If we switch over to the IWM, now the IWM, this is the strongest of the three, and you could actually see. Let me erase this here. Not show that. Okay. Erase those lines. Okay. So this is this one's the strongest of the three. And you might say, well, why? It looks, it's completely under all the moving averages and whatnot. Okay. The thing is that if you look at these highs here, it doesn't have much to go to break those highs. Okay. It doesn't have it's tight. It just needs to break up a little bit and then it's going to break these highs. But if you look at the Qs, again, the Q has to chew through all of this plus the 200-day moving average plus these highs to get back up. So this is the worst of the bunch. If we go back to our spiders, same thing on the spiders. It has to chew through the 200-day moving average, the 20-day moving average, the 50-day moving average, and it has to go through the highs that it's failed at twice. Okay, so this is also kind of tough. But we go over to the IWM, and you can see again that it's much closer to those highs. It's a lot closer to those highs. So listen, if they're going to rig the market to the upside, the reason I'm showing you this is because you want to pay attention to the IWM. Because if they try to get easy on the rates and they go for the easy route of, they ease up, okay, for the sake of a higher market, you're going to see the IWM move first. And this will be the leader. Okay. Now, another thing that you got that's going on in the market right now is you got a lot of money that's flowing into metals. Okay. Gold. See that? Now, the reason that you have this is because you have panic. Whenever you have fear, especially if you're having talks about war, whenever you have war talk, people always run to gold. Okay. There's a lot of panic going on in the market. You get panic selling. And you got a lot of countries right now that are starting to hoard gold. Now, lately, the market has been filled with panic as it is. Okay, so gold is showing you where people have fled for safety. Now, if Powell does follow through with what he says he's going to do, and he actually does raise rates and, selling off of treasuries, off of the Fed's balance sheet, if he commits and he does that, you'll see some movement in gold. Okay. The last meeting that Powell came out and he talked about, he doesn't like to talk about gold, by the way. Okay. And he doesn't like to talk about this because he knows that if they start to raise the 10-year treasury yield, they're going to blow up the housing market. He doesn't like talking about this. The last quarter housing prices, they went up 14%, 15%. And from March 2020 to March 2021, it was a 30% rise in housing prices. So housing right now is so overpriced that it's ridiculous. And Powell is sitting there at the Fed, biting his nails, trying to figure out what he's going to do, because he knows what will happen if he raises rates. It'll be a huge blow to housing. And that's where you got movement that's going on right here in gold. Okay. He can't curb gold movement until he takes out housing. But it all changes, of course, if he does start selling treasuries. So to basically recap, you got money going into gold. You got money going into energy. Have a look at the XLE. Okay. You got money going in here. You also got money going into the financials. Okay. Now it doesn't look so good as you see with energy, but nonetheless, you can see, this money that's starting to flow in the bank stocks. Okay. The problem with the banks though, is that, the sector, it's weak. Okay. you got weak movements in the banks. And you have to ask yourself, why is that? Biggest reason is corporate debt. Okay. And of course you have an industry that's been propped up since 2014. Okay. They've been printing about $6.5 billion a day. Okay. I didn't stutter. $6.5 billion a day to keep the banks propped up. And Wall Street knows this. That's why you got weakness in the financial sector. The people who know, they can smell smoke, and they know that there's trouble brewing with all these loans, corporate debt, real estate loans. If the housing market blows up, the loans go into default, and that takes out the banks. So again, you have fear. So where's the money flowing? Gold. Okay. Banks are kind of sketchy right now. The only thing that's helping the banks right now is that we have high yields. Okay, the yields are ridiculously high, and they're going to continue to get higher. We'll see what the Fed does, but that being said, let's look at tech. Okay, we were talking about banks, we're talking about gold. What about tech? Well, tech gets destroyed with high yields. If you've been watching me on Twitch, I've always, I was always saying watch those yields, because the higher they go, the worse tech gets hit. So the only thing that's helping the banks right now is those yields, right? So last thing I want to mention, let me see here. All right, so the last thing that I want to mention is kind of what's on the horizon, what's going on in the future, what I'm looking at, travel stocks. That's what I'm looking at, travel stocks, big box stores. In the next couple of months, you're going to see a lot of, I think you're going to see some action in the stay-at-home stocks, Home Depot, the big box stores, Best Buy, whatnot. You're going to see some activity going on in these stocks. I think so. So I'm keeping an eye out on the travel stocks, because once you get short covering in the stay-at-home stocks, then that's going to ignite some buying activity. And same thing will happen again, with a big box store. So that's pretty much what I'm looking at. Now, we're at that point now, though, where the market's going to go. We have to just wait and see where it's going to go. Okay. Like I said, they're either going to basically get it back into trend. Okay. At the expense of the country. You'll see some horrible inflation. Gas prices will be really, really bad. They'll destroy the country. Okay. Most people will not be doing well if they decide to keep the market up. It'll be at the expense of Main Street. But what Wall Street will do very well. The very wealthy will make a killing. Okay. And anyone who's in the market long will continue to make money once again at the expense of Main Street. If they let the market be a free market, then Wall Street will crash, and it'll be a serious crash. But it'll, that's a price to pay. I mean, they've been keeping this market up artificially, financially engineering this thing artificially for so long that they need to clear it out already. And that's why it's going to be one of the worst crashes I think we've ever seen in a while. Now, I don't want to be doom and gloom, but this is just economically speaking, this is what it is. Okay. So I am like 80% short in my portfolio. I just shorted AMD. Again, we talk about high yields. Okay. So the only thing that I'm kind of looking at long is you got defensive, of course, the travel stocks, like I mentioned, travel stocks, big box, stay-at-home stocks. Those I'm starting to look at those. Okay. But there's a lot of people who are basically, they don't know what to do, because the market is kind of going all over the place, and they're hiding in defensive stocks. Okay. They're hiding in like Coca-Cola and Pepsi and all of that stuff. Okay. They see the panic that's going on, and they, usually when you have a lot of panic is that, that money tries to find safety. And so again, defensive stocks, that's where you see the thing about the defensive stocks is that there's a real lack of loyalty in those stocks. Okay. Defensive stocks are like the ugly girl that no one wants to dance with. But since all the pretty girls are in the bathroom, the ugly Betty gets some attention. Okay. But once the girls come out of the bathroom and they're all done up, she's out in the corner again. That's like tech. Okay. Once tech comes out and gets back into favor, people will drop these defensive stocks and they'll go straight back into tech and they'll be buying. Okay. Very little loyalty in defense. But as long as the market is getting whacked, you can make some money in defensive stocks. Okay. But for a stronger play, I would say probably maybe like energy, if you're looking, I would say energy is better than defensive. Okay. I don't have much energy exposure, but doesn't look too bad though. Okay. All right, guys. So that's pretty much it. That's my take on the market. You didn't hear me talk about war. You didn't hear me talk about Russia. Okay. Because, look, it doesn't matter what the heck happens. Okay. What happens is, it all comes to Jay Powell. It all comes down to the Fed. Okay. Whether it's COVID, whether it's Russia, whatever it is. Okay. It all comes down to this is all the Fed's doing. Okay. So if they decide again, they want to rig the market and bring it up, they'll do it. And then you'll hear CNBC giving you 1,001 reasons why you should be buying stock and buy the dip and all that. You'll hear that mantra all over again. And even if, look, here's the thing about Russia, guys. Russia's been in this situation for a long time. Okay. But we didn't hear anything about Russia when the market was just having a tear. But now that the market's having some trouble, it's Russia's fault. All right, so don't get it twisted. It's just a smoke screen. They're trying to find reasons to get people emotional so that they can say that's why the market is down. No, the market is having a tough time because of all the financial rigging that's been going on with it. That's pretty much it. So if they try to bring it back up, again, it'll be at the expense of Main Street. Okay, it'll be at the expense of terrible, horrible inflation that's even worse, probably the worst inflation that this country's ever seen. We can get there. It depends on what's more important to them. So at this point, I'm expecting that we're going to see a crash. I don't think they're going to hold this market up. I don't think they have the, I don't see it happening. Okay. It could happen. I could be wrong. Okay. I'm not I don't have a crystal ball here, but I don't think that it will happen. If it does, you'll see it on the charts, and I will switch my, I'll lose my opinion and I'll go long. Okay. I have, it's not like I'm going to fight the market. Okay. I'm never going to fight the market. If the market is long, I will be long. If the market is, breaking down, and moving to the downside and everything, you have stocks falling all over the place, I will be short. Okay. I go with whatever the market is telling me. I don't care about the news. I don't care about, anything else besides the market. Okay. So right now the market is telling me that it's having a really tough time. So anyways, that's it, guys. That's all what I have. How about you guys? How are you guys doing? Let me know how you guys are doing. Follow me on my YouTube channel. Okay. I will be posting these live streams are going to get automatically archived on YouTube. And on Fridays, I trade live the final hour with you guys here. Okay. Because I do want to look, the whole point of this channel is to kind of share my experience. I didn't really talk about that, my experience in the market and whatnot. I don't want to make the video like too long because it is a post, but the whole point of this channel is to help you understand the market so that you don't get suckered. Okay. Because I've been in these markets for a really long time, over 15 years professionally. And, there's just so much shenanigans. The market it's set up against you. All right. So the whole point of this channel is to help you to see those traps and avoid those things and not be suckered by what they're trying to tell you what is going on. Okay. But just let the market, tell you what it's doing. And it's very simple. It really, it's not that complicated. I'll be doing some more videos in the future, trying to kind of break down a little bit more, but that's my take on it. If you have any stocks that you're looking at, you want my input on, I do have the queue that's open and people can come in and they could enter it into the Twitch on the Twitch chat and it'll come up. I'm trying to figure out how to do it with YouTube, but right now it doesn't have, you can't do it through YouTube. So if you do want to have like a stock reviewed and you want my opinion on it, hop into Twitch. hop into Twitch, and you can hit exclamation chart, type in your symbol, and it'll come right up. That being said, what I'm going to go ahead and do right now is get back into because I've been just jabbering. Okay. So I want to connect with the chat and go over my positions. Okay. I'm going to see, what's going on with it. I'm in like 18 positions. So I need to look at those and see what's good for tomorrow, and adjust all my positions accordingly. So let me see here. Let me get back into the chat here, and I'll even open up the queue for those of you who are in the chat right now, and you do actually, you have some questions about some stocks that you're looking at, all of that good stuff. I will open up the queue and get that going. So let me see here. Where's the... Okay, there we go. There's that. Okay. Give me 1 second, guys. I'm open this up. Okay, so here is the chat. Let me pop out the chat. I should just like have this like as a bookmark. I don't know if it changes the address of the chat. But okay, cool. So here we go. All right, so shout out to the room. Sparrow's already talking market talk. And okay, cool. So let's see here. Everybody in the room, shout out to you. M-Spar, Erica, Gas Pumps, Kazips, Mighty Warlock, Nodum, Beast Contest, Orthoduck, P-Stash, Purple, Ton, Skinny 8, Sheeny, of course, Tube of Sensodyne, and Emo Dad, Delana. Okay, so shout out to everybody in the room. Thank you guys for joining me on this late night stream. And again, if you just kind of didn't catch the beginning, I think Monday is going to be a late night stream. I think Monday I'm going to just have these streams because it just works so much better for my schedule. And I think 10 o'clock or so, I think that's going to be a good time. So let's open this up. Okay, so they're now open. So if you guys have any, I don't know how long I'm going to be on. Probably not too long because sleep is very important. That's the other thing I want to say. It's a little off topic, but not so much. Not so much. You got to make sure you have good sleep. That's extremely important. When I was trading professionally, and you know what, even though I'm not a professional, I'm no longer registered. The sleep schedule has always been, very important. Okay. Because if you're not sleeping well, your health is going to deteriorate. Your sleep helps your clarity. It helps you to think properly. You see some of these shows or some of these movies like Boiler Room or whatever, or Wolf of Wall Street, guys going out crazy. That's a different type of thing. But if you're a trader, you don't live that lifestyle. That's a big myth. Okay. Traders usually go to bed pretty early. Okay. They rise early. They have a good schedule of, basically taking care of themselves, whether it's going to the doctor, whether it's, going to a shrink. Okay. Because, That's also another thing. You want to make sure that your psychology is not getting screwed up, so you can look at the market, and any emotional baggage that you have is not going to rear its ugly head in the middle of trading. Okay, so that's the other. If you're an emotionally unstable person, it's going to be very hard for you to trade. So you need to have your mental health in check. You need to have your physical health in check. You need to have your sleep schedule in check so that you can have a very clear mind. So sleep is very important. You want to make sure that you're getting some good sleep. Very, very important. Otherwise, very hard to see the markets and to trade. Okay, it will affect you. So it's just kind of a little side note there. But I did want to mention that because nobody ever really talks about that. But sleep is very important. So I'm going to be on for a little bit, but I'm not going to be pulling like an all-nighter because I can't afford for it to affect my game. So I got to be up early, got to do all that stuff. So let me kick it off like this. Okay, I'm going to go ahead and go through my positions first, see what, see how they're looking. And then I'll get to your guys's stocks and we'll pull those up. We'll talk about them and I'll give you my take on them. So we'll do that. And we'll kick it off like that. So, and let me see, there's some questions in the chat. Shout out to Mighty Warlock. Thanks so much, man. First time chat. Welcome. Chart HD. I will do that. Definitely. HD is one that I trade regularly. So I'm glad you requested that. That's a favorite of mine. And that is, again, that's one that I trade regularly. So we will pull that one up. And you say I'm not playing earnings. Yep. Sheeny is absolutely right. I don't play earnings. Earnings is a 50-50 game. Okay. They could come out, they could announce great news and the stock could be down 20% and you could take a 20% haircut on a stock. So for me, I don't expose myself to that risk. When they're going to report, I am out of the stock. If I absolutely want to be in the stock, I'll just make sure that I'm reduced down to like 20%, maybe 25%. I don't know if I'm really just kind of like stubborn on the stock, but I'm not going to be all in. Absolutely not going to be all in because you don't know what could happen. And there's some people say, yeah, but the stock could be up 30%. It doesn't matter. I'm not willing to trade 30% for being down 30%. Okay. That's not how I trade. And earnings, you don't have so much control. So for me, I am trying to look, my first rule of thumb is I don't want to lose money. That's my first goal. I don't want to lose money. My second rule is that, I want to risk as little as possible. So if there's a lot of volatility, I'm not going to play it. If there's earnings, I'm not going to play it. Okay. I need to make sure that my capital is in, not so exposed to this volatility. Okay. So I'm not looking for these earnings and, that are going to shoot me up 30%. Because look, it could happen, but on the flip side, it is going to happen. Look, if it hasn't happened to you, it will. Okay. And it's just a matter of time. It's Russian roulette. Okay. It's like somebody's playing Russian roulette and they haven't blown their head off. It's a matter of time. Okay. Mathematically, it's going to happen. It just hasn't happened yet. So you keep playing earnings, and it's going to happen. So if you're doing that, by the way, I'm not knocking you if you are doing that. Okay. We all have to learn. I used to do that. I learned not to do it, not because somebody told me what would happen, but because I got hit. That's when I learned, I shouldn't do this. This sucks. I can't get out of my position. They've announced bad news. I have to wait until the next morning to get out. And a horrible place to be. You're not going to get good sleep that night. And probably a few nights after that as well, maybe even a few months if you got hit hard enough. If you're like 100% in that stock, which I hope you're not, but if you're like 100% in, that could be the death blow to your account. It may take you months to get back to break even. So for me, it's just not worth it. I just don't need to do that. I don't want to get into the risk. But anyways, I'm rambling on. Long story short, I don't play earnings. If you are playing earnings, let me just say this. Make sure that you're not, my opinion, make sure that you're not 100% in. Because if you are, and it goes the wrong way, you will be significantly wounded financially. And you may not, it may take you a very long time to break even. You may not break even. I hope you do, but people who play earnings, that's eventually what happens. It's a matter of time. I've never met any millionaire traders who play earnings. Never, not one. If you have, put their name in the chat, okay? Because I want to know who. I've never met any. So if they're not doing it, I'm not doing it. You know, if they're not going to do that, I don't want to do that. The only people who play earnings are very risky players or people who are just coming in. And again, they're people who haven't necessarily got burned just yet. So you got to be careful if you're doing that. And again, I'm not knocking you. If you guys want to do that, that's fine. We're all grown adults. I'm not here to kind of like, you know, hold your hand or tell you, you know, don't do this, don't do that. I don't want to see you get hurt. I don't want to see you get hurt. But my thing is, if you are doing that risky play, just make sure that you're not throwing 100% of your capital behind it, so that if things do go wrong, it's you know, you're still going to be able to get over that quicker. But if you're like 100, like even being 100% in anything, which I don't even recommend you do that, but if you are, just be careful. So yeah, because you just don't know what way it can go. Earnings are really, guys, at the end of the day, they're 50-50 play. They could announce great earnings and the stock will get, you know, whacked. And then they could announce horrible earnings and the stock just pops like 30-40%. You just can't read it. You can't read them. Okay, it's a Joker's wild card. So, and Mighty Warlock says, I'm down 6K this past week through earnings play. Some had good earnings, but still dipped. That's the thing. That's exactly what I'm saying. Earnings are, you know, it's hard to control. It's hard to trade because you don't know what direction they're going to go. So for me, if I don't know, I don't want to be in the stock. I want to be in periods where it's quiet, not when it's all over the place. Yeah, anyways, let me get into it. It's already 11 o'clock here. So guys, you can see here, pretty much I am all short. Okay, I do have some longs here, but for the most part, I'm short. Starting off with Oracle. And let's see here. All right, so Oracle, I've been shorting this one, been scaling into it, and adding to my position. So yeah, this one looks pretty good. Make sure maybe I should put on some music here, right? It seems like it's going to be a little quiet. Oh, that's the other thing. I got to be careful now that I am streaming on YouTube. They're very, very strict with the music. I already got like a little copyright notice or whatever, so I can't just play some stuff. Let me just put on the CNBC a little bit volume up so that it's just not like dead silence. Don't want to have that. It's kind of weird. So let me turn this up just a little bit. Okay, guys, is the audio from the CNBC, is it too loud? Is my voice still much louder than the CNBC voice? Let me know. I want to make sure. You don't hear it? You don't hear okay, let me that's weird. All right, Sheeny. So let me know if you don't hear. Okay. Is that better? I mean, I could hear it, but
Moscow's demands for Ukraine to drop its long-term goal of joining NATO had been
how's that? Do you guys do you still not hear it?
You know, some countries are against Ukraine
Now you
joining
hear it?
NATO, but nevertheless, in
Okay, and how
2008,
is my
the
voice
US, they
still,
signed
you
a
know, is it like
memorandum which opened the doors
drowning
of
out my
NATO for
voice, or is
membership
it
of
can you
Ukraine
still
and
hear me
Georgia.
pretty loud and
So
clear?
what is the answer to my question? Why do it? Under US pressure. That is the answer.
Turn it down a bit. Okay,
If they
all
make
right, so
one
let me do
step
that.
under US pressure, what are the guarantees that they will not do another?
I got an audio interface card, so it's easier to control the
Ukrainian counterpart in Washington D.C. tomorrow. The US and its
All right,
allies
that should be
also
good. Let me know.
to impose sanctions on
Let me know how
Russia.
this sounds,
The
guys.
United Nations Security Council convening an emergency session this morning. The US ambassador to the UN.
Delania, dude, is it said Delania says it's a bit loud? Much better now? Okay. All right, cool. So like I said, guys, I just want to have it a little bit in the back so that it's not just, you know, silence and then my voice. I'm not trying to do some ASMR or whatever. Okay. By the way, guys, what do you think about this mic? Hopefully you guys could hear as much of a difference in this mic as I've been kind of hearing in these headphones. This thing is good. Yeah. This thing is like radio quality, man. Radio quality. So I'm glad that I got this thing up. I'm not quite disputed. Shout out to Disputed. But I kind of feel like you know, this quality mic is definitely radio game worthy. I'm pretty sure I heard your wife or daughter in the yeah. Yeah, man, this thing picks up all kinds of stuff. You know, my daughter's singing in the room. She's a singer, so yeah, definitely picks up all that stuff. Okay, so yeah, let me so okay, look, Oracle, yeah, I'm short Oracle, and you guys can see where is this? I arranged a couple of windows, by the way, kind of reconfigured the space so it's much better to see, easier on the eyes, all that stuff. So anyways, here's Oracle. Okay, once it broke that 50, it was basically, it's just in a beautiful downtrend. So as long as it's kind of doing this, I will continue to short it, and you know, just even continue to add to my, every time it breaks lower, add to my short. Okay, on some pretty good significant volume, add to my short, make sure I got some trailing stops. So that's how I'm treating Oracle right now. And yeah, this one is this one's just it's working out good. What can I say? I'm happy with this one, and like I said, I'll keep adding to my position. I'd like to see another good drop in Oracle. I mean, it's already breaking through these lows. The volume isn't anything great, but if I can see another steady drop in this, you know, I'll continue to add. And again, just watch my stop on this one. But this one's good, already up 5.3% on Oracle. That's the other thing, guys. You know, you might look at these stocks and you're like, man, you know, these are small little gains. You know, I mean, unless you look at the options here, you know, like, these are the options. I normally don't play options, but I've been experimenting with options because they're very, very popular. And I know a lot of you watching this channel trade options, and I want to make sure that, again, you know, I want to try to give to this channel, to the community, as much as I can. So I've been playing with options a little bit more to see more or less how they run in comparison to the actual shares, because sometimes, like I said before, you could be up in shares and the option will be down. Sometimes you could be down in shares and the option will be up. So there is some unknown variables there, and I am not an options player by any means, but that doesn't mean I can't be an options player. It just means I need to educate myself. I need to the best way to learn something, by the way, guys, is to put some capital in it. Don't put, a lot. Just put a little bit of capital into it, so that, you're basically treating it like tuition. Okay, when you go to school, you pay tuition. Okay, when you're learning a sport, you're paying your coach. Okay, that's tuition. Okay, you're paying to get to kind of master your craft, to get better at what it is you're doing. This isn't anything. If you want to be an artist, okay, you're gonna seek out tutors, you're gonna pay them. This is all tuition. So the thing is, the market is your tutor, the market is your coach. If you don't have a mentor, if you don't have the luxury of having somebody like that, then you need to kind of like learn yourself by having the market show you. So you do that. The best way to do that, in my opinion, is to get your feet wet, put a little bit of capital in it, and learn how to do it. But expect to lose money. Okay, you just want to make sure that you're not losing a significant amount. You're just, whatever you're losing, you're considering it tuition while you understand how it works. Now, you have people who basically say, well, can't you just paper trade? You can paper trade. The problem with paper trading is that there's no emotion there. There's no real money on the line. So the minute you leave paper trading and you go into actually trading with money, you're going to trade differently than when you were paper trading, because there was no real there's no real risk. If you make a bad trade, it's not really going to hurt you. It's kind of like being in a flight simulator, and then you actually get into an airplane and you're flying. Okay, it's your emotions are there, and you need them. Okay, you absolutely need those emotions. They're a part of trading. You have to you cannot master trading unless you master your emotions of greed and fear. That is absolutely important. You just, the best traders in the world have mastered their emotions. So if you're trading, paper trading, and you jump into actually with money, you're going to feel those emotions. You're going to feel the greed. You're going to feel the fear and the greed and all of that stuff. You're going to feel these elements and these emotions. And so you want to understand them, and you want to understand how they affect your trading. So the best way to do it, again, guys, jump in with a small amount, so that if you feel too much, if you're just really panicky, you put too much money on the line. You have to lower. It's like poker. Okay, you gotta lower your chip size. Okay, go to smaller buy-ins, all of that stuff. Okay, you gotta, but get in so that if you're down, it's not like you're not gonna lose sleep over it. Okay, again, you're just like, okay, I'm losing some money here, and then the money you make, it's not, you're not gonna be rich with it, but it's going to allow you to get a hold of those emotions and learn how to kind of ignore them. Because again, if you can't ignore those, they will ruin your trading. They'll come in, they'll ruin your trading. I try to, once I feel my emotions, I know something is wrong. Okay, I know something is wrong. I need to lower my size. I need to see what it is that I'm doing, because that something is wrong. If I'm actually reacting to greed and fear. For the most part, I don't react to it. If the market goes down, it goes down, and I'm short with it. If I get caught, I just get out. I have my stops, get out and get into the next trade. You don't dwell on it. It's just, it is what it is. You are going to lose money. Okay, you're going to lose money. You just want to make sure that the money that you're losing on those trades is small and insignificant compared to your winners. Your winners have to be much larger. So again, it's going to take you time to get there if you're a new trader. But the best way to do it is with small amounts of money, so that you actually really start learning how to get a hold of that, a hold of those things. So, and Sheeny asked, okay, so Street, I never really asked. I understand you wanting to weigh the option alongside the underlying play. What would your goal be with options? Okay. That's a good question, Sheeny. Let me answer that. Then I'll get to the next part. Well, let me get to the next part too. Some play the ability to cover or cash secure. Some like to play only the premium. Some play the decay. Scalp. What's your idea of options? Are you running it to expiration? Yes, I'm getting as close to expiration as I can. Are you exercising? Yeah, I'm exercising for sure. Look, here's the thing with options. This is why I'm getting into it. there is a lot of you guys out there who are trading the market and you're not really buying shares. You're just going straight into options because it is, it's cheaper. It's cheaper. Okay. You don't have to have the cash to buy 100 shares. You can just buy the option. The problem with that is that it's riskier. Okay. It's much riskier than owning the shares outright. But a lot of people say, well, I can't make money because I can't buy that much shares. I can buy a contract, but I can't buy 100 shares. It's too much capital on the line. So, and I understand that. Okay, I understand we're trying to make the most money that we can. The problem with that is that it's kind of like weightlifting. Okay, it's like weightlifting. If you and I are going to the gym, we're going to start off on smaller weights if we want to kind of slowly get to where we can, bench a lot or whatever, bench our weight. We're not just going to say, load it up with, 200 pounds. I could do it. You're not just going to do that. You're not going to put that weight on. You gradually increase the weight. You gradually do it, because if you just go in one leap, and you don't have a spotter, it's the end of the day for you. You're gone. If you have a spotter, it's just, you're not going to be able to do it. It's too much weight. So I know it's like, well, what does this have to do with options? Here's the thing. It has everything to do with options, because the thing with options is that the whole point of this channel is that I want to help people to avoid these traps. And I know a lot of people are going to disregard what I'm saying and just go and straight up play options. And I kind of feel like, well, I really do want to try to help people understand it, because look, you can be right on the direction. You can be, you can play the shares right and make money in the shares, and you can jump into options and lose money, because I've done it. Okay. But I think, look, the thing with options is that I want to play the options very as similar as I am with playing the shares. Okay. So I want to treat the option like it is shares. So if my position is up, do I liquidate? No, I let my shares ride. I let the position ride out, and I get as much out of it as I can. There was I don't want to venture too much. Let me stay on track here. So the thing I want to do with options, I want to trade options the same way that I'm trading these shares. And I want to understand that correlation, because sometimes there is a disconnect, and I haven't really given it enough thought and enough study to actually understand that disconnect. How can I be up on shares and down on options? How can I get stopped out on shares and be down like, maybe be up like 20%, or not 20%, be up like 0.5%, but be down on my options. See, this is a problem. So it's like, I'm trying to understand this correlation, so that eventually I can help people who are just basically going to play options. Okay. And at the same time, look, this isn't charity. Okay. I'm just putting it out there. At the same time, I can make money myself. If I can learn how to make money trading options the way I play shares, then, why not? Why not? Okay. You're going to have much more, look at right here. Okay. Look at my 3M position. That's up 100%. This option, this contract up 100% versus my shares, which is 5%. Okay. So if I could get to that point where, my winners on options are, 100, 200, 300%, and my losers are 50%, I'll take it. That's not bad. Thing is, I need to play it out long enough so that I can start having a read on it, because if I can't have a read on it, then, it's just kind of like you're just shooting in the dark. So I am going to trade options, not on every position. That's the other thing. The more expensive the shares, see, that's the other thing about trading shares. When you're trading shares, the more expensive, the better that I like it, because the less, usually it doesn't run as much. Okay. I don't like getting into positions where the stock costs $5, because just a few cents is a huge percentage for me. Okay. Now, if the stock costs $500, I'd rather take that because it's going to take a lot more for that percentage to move. So it's the volatility. It's not as volatile. Now, that's a general statement. I know some of you come back to me like, oh, well, what about this? What about that? Okay. I'm speaking generalities here. Okay. Generally, the more expensive the stock, the less volatile that it can be. Okay. 20 cents is going to make a $5 stock some huge movements, whereas on a $200-$300 stock, that's nothing. So I like playing the stocks that cost a lot more because I can control my risk a lot more. And I'm not trying to hit the home runs. I'm trying to get, 3, 4, 5%, 6% and get them out regularly like clockwork. The more I could do that, the better. And when I'm down, it's down, 1-2%. That's great. 1-2%. I've always said if your risk to reward is like, you're risking 2-3%, but you can make potentially 15-20%. That's great. But if you're averaging like 5%, that's still not bad. That's still not bad because you're double what you're risking. Okay. If you can do that, that's not bad. So that's what I try to aim for with my trading. That's how I trade. That's why I don't like when the stock is under $20. I'm not so sure about it. Going into options though, options are different. Okay. Because options actually you're risking, in a way, you could be risking less playing a stock on options that's $5 or $10 stock, buying the option, because if it does swing really crazy, your capital isn't going to be swung around so much. There is that limit. There's that limit to what you can lose. Okay. If I take a position in a $10 stock and it moves all over the place, even if I have my stop, it can blow past my stop very easily. Okay. Now it can definitely do that. These $10 stocks, $5 stocks, they can blow past that stop and just really go and you can get hit. But if you have an option, obviously that's all you're going to, you can put that option, and whatever that option costs, that's, you're willing to give that up. You're willing to risk that because if it does, again, if it blows past that stop, but you have an option, it doesn't matter because that's all you're going to lose is whatever you put into the option. Whereas if you buy the shares, you could set a stop, but it can blow past that. Okay. And they do. I mean, this is the market. Okay. There is unpredictable things that happen. So, back to, what do you want to get out of options? Well, I may play these $5 to $10 to $15 stocks straight up on options. I may not even buy shares because, I like for sure, I know what I'm going to risk is just the price of the option. So we'll see. Again, this is right now, this is just, a study, and, trying to understand this connection between them. So hopefully that helps, Sheeny, with kind of giving you my take on how what I want to get out of the options, how I'm kind of trading these options. But yes, just to sum it up, I'm trading these options almost exactly like how I trade my shares. Actually, exactly. Okay. When I get stopped out of my shares, I close the option. I'll just let's see what happens. I'll just close the option. When the stock, whatever, when I want to sell my position, when I'm like, look, it's pretty good. The stock looks like it's leveling off. I'm going to just close my position, take my profits. I'm doing the same thing with the option. And then after a month of doing this, we'll weigh the results. Then we could tally it up and we could see what the numbers are telling us is, what is our average win in our options? What is our average loss? Because we know what, I know what those are with shares, but I don't know what those are with options. And I haven't, again, it's just kind of like playing them around, but I'm going to be more diligent in actually watching these. And again, I'm not trading all of my stocks and buying an option with it because some of these options are, they can get pricey. So, and especially again, if the more expensive the stock, the more expensive the option. So this is a thought that I had. I may actually trade some options and not even buy the shares, but on stocks that are $20 and less that I want to get into, I may just buy the option and try that for like a month. And again, just treat it as a test to see what happens. Cloud Claire, no, this is not pre-recorded. This is this is live. This is live. This is live right now. Just, you know, it's a late night stream. Usually I stream during the day, but this is like a 10 o'clock stream. I'm probably going to be doing this, by the way. I'll probably be doing these late night streams on Mondays. Not every day, but on Mondays. So let me go back to what Sheeny says. You can completely afford the approach, so I can appreciate it. You'll be onboarding more risk with theta decay. However, exercising will allow you the ability to inherit the shares and then turn around. And yeah, that's true. That's true. So, but, you know, really just trying to, like I said, I may just buy some options on some of these, you know, stocks that are just really low price stocks that I wouldn't necessarily buy, but buy the option. So we'll see. But guys, I'm not an option player. Okay. So this is right now, just like I said, the best way to learn is to just, you know, put a little bit of capital into it and, you know, call it an experiment. Okay. Just really study it and monitor it. But, you know, a little bit of capital is a good way to learn. That it goes back to what I said, like, you know, if you're paper trading, there's no emotion there. So, you know, it's really hard. You want to have a little bit of emotions, okay? Because it's going to help you to be a better trader. It's going to help you kind of like level those things out. So that's what I'm doing. Let me see here. It's not the share price, it's the market cap. P-Stash, I trade options as pure momentum play. Yeah. Yep. That's the thing, P-Stash. I mean, you know, a lot of people do. I want to play it like how I play my shares, you know, and you know, treat it like that, and we'll see what happens. Market caps are big, price to, yeah, guys, I've been trading for a while. Okay. I've been trading for a long, I was a professional trader for like, you know, 15 years, as an institutional trader. So, you know, I like to have a lot of positions, you know. It's not like that's the other thing. A lot of it is people don't want to hear it, but a lot of it is you got to focus more on this percentage, in my opinion, if this is a long-term thing for you, for me. Okay. Now there's different things, but if you want to make a living out of trading the market, the first thing is actually just trying to get consistency. All right. You don't really want to focus on the dollar amount. You want to focus on the consistency. So even though I buy a lot of shares, I'm still really always looking at the percentages. Okay. Because what happens is as your capital builds, you just continue snowballing that into your stocks. You just, you know, where you started off, you know, buying 100 shares, you know, and as you make more money, now you're buying 110 shares. Okay. And next month you tally up your capital and then you buy, you know, 100 and maybe 11 shares. And at the end of the year, maybe you've gone from 100 shares to now you're trading 200 shares, you know, and you just keep snowballing that, you know. It's like Monopoly. It really, this is a business. So you just keep putting that money, that capital back to work for you. You keep, you know, just allowing it to grow and grow and just, you know, buy more shares. You build slowly. A lot of people don't want to hear that. It's just, you know, no, I don't know anyone who really says it, but, you know, that's how it is that's how it is in these markets. You know, it is a business. So if you can get to that point where you're bringing 2 to 3% consistently every week, every month, you're going to be rich. You're going to make a good living. It's going to take a little bit of time, but you will get there because, I mean, think about it like this. some of the best hedge funds in the world, if they could do that, they would hire you as a trader. Okay. They would hire you as a trader. It's hard to do that. Now people say, well, I could do that. I did 80%. Well, yeah, you put all your capital into one position and it pops 60% and you were down on a couple other positions overall. But you got to aim again for consistency. It's not about pops. Okay. If you were to look at all of your positions and tally them all up, what's your largest gain? Okay, what is your average gain? What's your average loss? Okay, so for me, I always try to get people into the mindset of treating this as a business. Don't even look at the capital. Okay, I mean, people are starting with 10 grand, people starting with 50 grand, people starting with 100 grand. Whatever you have is what you have. Okay, that's your working capital, but the percentages will always be the same. If you are making 2 to 3 to 5% consistently every month, then your capital will grow and you'll put more money. Like, I guarantee you'll find a way where if you started off with $20,000 in the market, which is most people are doing that, buying silly stuff, but if you start off with that, I guarantee you, if you've doubled that and your risk is very damn low, you will come into the market next year with more money. And you'll put into it, because you figured out the most important thing in the market, which is consistency. So I would rather be consistent with 2 to 3% returns consistently over time, rather than to be like, get these 20 or 30% home runs every now and then. Because again, it just comes down to that risk reward, So anyways, that's me. It is getting late, so let me continue on with the going through my book here. So all right, so that's Oracle. Let's see. Oracle's looking good. All right, I have everything. Let me make sure. Okay. So if Oracle makes another move to the downside, and breaks the lows, I want to say breaks the lows. I want to see Oracle level off a little bit. Okay. It's already been selling off beautifully. Okay. This is just a lot of selling going on. This is great. So, this is really good selling. It's doing exactly what I needed to do. So as long as it's doing this, I'll stay short. But what I would like to see with Oracle is for it to, because if you see, it's just been moving lower. Okay. I want to see it to pause a little bit. Okay. Pause a little bit and not make a new low. Okay. I wanted to see it just kind of level off and stay off of the lows, at least for maybe a day, maybe even 2 days. If it can do 3 days, that's good. But really, I would say at least a day or so where it stays off the low and then it breaks the low again. The minute it breaks that low, I'll go in there and I'll add to my short position. Okay. And then I'll move my stop down a little bit. And you have trailing stops and just keep following this all the way down to where it wants to go. And just let it ride. Okay. Let it ride to where it wants to go. The minute it pops up and it hits my stop, then I'm out of it. I'm out of the position. But if this one was to hit my stop now, I would still, I'd still make some money on it. So at this point, I'm not even stressing over Oracle because I already made money on this. So it just, like I said, I'll continue throwing capital into it as it moves lower. I'll continue, adding to it, and just lowering my stop, and that's Oracle. So let me move on to the next one. We have 3M. This is another one. This one has been great. This one has really. I was just adding to my position every time it would break. Every time it was breaking right here, and it's just done pretty good. And I'm pretty heavy in this one. So this one's down 5%. Same play on this one. As a matter of fact, though, if this one is really taking a beating. This one's coming down hard. So if it can break these lows, I'll add to this one as well. I'll add a little bit more to this one and just keep adding. So this one's as they move lower, guys. What I'm doing is I'm kind of just letting them kind of ride out and just building my position slowly more and more and more, because it's not necessarily when you get in. I mean, that's very important, but it's also how many shares you have. So as it moves lower, I'm building my position more and more and more. So it's, you know, as every penny it drops, every dollar it drops, you know, with a larger position, you're going to make more money. So it's kind of a balance between you have to have the timing right. Okay. You don't want to wait too long. Once it breaks, the way I treat it is once it breaks, I go with a break and I short it to kind of give it more juice to go to the downside. And that's how a lot of institutional traders do it. When the stock breaks the lows and they hit it with a harder short, it's kind of like dunking the guy's head back underwater. Okay, you just keep doing that until you know he's done and the stock just goes all the way down, and you just keep building that. Every time the guy comes up, that's, you know, you can short it some more. So that's how you kind of do it. You can short it either. I like to short it as it breaks. So that's where I like to catch it, because what happens is as it breaks and you're shorting it, it's giving, you're kind of like pushing the gas for it to go down more. Okay. Rather than waiting. Okay. It's kind of like a bum rush. You don't really wait. And, you know, if you go to a concert and whoever comes out on stage, everybody's been waiting for the person to come out on stage. You don't wait. Everybody bum rushes and you don't just kind of sit there waiting. Everybody goes. So once the stock breaks, it's a bum rush. So when I short it, it's kind of like, I'm giving it that momentum and throwing some more movement to it, to the downside. And of course, putting my stop, as I do that, then I bring my stop and do a trailing stop, so that, if the stock gets to that point where it's like, all right, I'm done, I'm not going down anymore, I hit a bottom and all the buyers kind of rush in and they push it up. Well, I'm, like I said, I'm not going to get hurt. I put my stop there. So, you're taking that calculated risk, and the odds are with you. So with 3M, this has been pretty good. So I'm going to, I'll, if it could take out the low, let me see here. We have a low of 147.24. If it could take that out tomorrow, I will be there to help push it down lower. Okay. And hopefully a lot of people will too, especially while at panic. So, cause here's the other thing, when they break, it's hard. A lot of people make, and this is something that actually Wall Street has put out there, and it's a complete lie in my opinion. I'm sure you guys heard the phrase, you can't go broke taking a profit. Right. No one's went broke taking a profit. That's baloney. Okay. That's baloney. You can definitely go broke taking a profit. What I mean by that is this: if you buy a stock, okay, and most people don't short, most people just buy. So I'll use that as an example. If you buy a stock, right, let's say you buy it at $100 and it goes up to $110, most inexperienced traders will sell it. And they'll say, I made a $10 profit on this, and they'll be happy with it. The problem is that if that stock is a real mover and it continues moving higher, you've now jumped off of a train that's just building momentum and taking off. So you can never catch it. So if you bought it at 110, or you bought it at $100, it goes up to 110 and you bail, you get out, and that stock runs to 120, you can't catch it no more. It's already gone. You should have stayed on it. And as it broke 110, throw more money into it. Okay. Because you're helping to bum rush with all the buyers. All the buyers are buying it. You're throwing more money into it and trying to break those highs. So it creates a lot of momentum, and you just ride it to the upside. And again, you don't do it blindly. Okay. You got to make sure you have a stop, so that if you're wrong, because, we are going to be, no one's perfect. Okay. We are going to make wrong calls. That's going to happen. But when you're wrong, it's okay. It was a calculated risk. You're risking, 2 to 3, 5%, whatever. But the thing is that you can go broke taking a profit, because that $100 stock that you sold at $110 could have ran to 160 and you missed the whole movement. And the thing about this game is that it's really at the end of the year, when you tally up your winners and your losers and whatnot, it's really just a few stocks that you bought that just really were huge home runs that helped to take you there. They helped to really kind of knock it out of the park. But if you would have sold those early, you missed out on that 20, 30, 50% gain. And I'm not talking about buying a real risky stock. I'm talking about a Home Depot. Okay, I'm talking about a freaking McDonald's. Like, these are these blue chip companies that people are like, oh yeah, you know, they don't do anything. They don't do anything. But when they get going, they're like trains, they're like freight trains. Okay, they're hard to stop. So as you know, again, you're seeing 3M here. As this one keeps going, you know, you just write it down. So I would say my philosophy is that you know, as it goes more in your favor, I'm adding to the position. So a lot of people get it twisted. They do it the other way around. You know, as the stock goes lower, they'll buy more. I'm very, very against that, guys. I don't know anyone who's ever made money doing that. Most people who do that, they lose money. And I know, because I was a stockbroker before I was a trader in the markets. I was a stockbroker, and everybody did that. I want to say everybody, but most stockbrokers that I knew, most financial planners that I knew, they did that to all their clients. They would call their client up and they would say, look, the stock is, you know, it was $60. Now we're down to $40. You should dollar cost average. You should buy some more because you're going to get a better price. You're adding to your losers. I would not do that. I would call up my client and say, look, the stock is broke. Let's just, you know, let's call it a loss. We were wrong. Okay. But I'd rather be wrong 5%, maybe even 10%, than to be wrong 20%, 30%. Because if I do that to you, I'm not going to have you as a client. And when you have, you know, $2 to $3 million with me, that walks out the door. That's hard to get. That's hard to get back. Okay, that's not money that I want to lose out of my account. So whenever my clients, you know, we're down in position, I would just get them out. And they used to say, well, shouldn't we buy more? No, you don't. You don't want to buy more. We're wrong. The market is telling us we were wrong. We want to take that. We want to take what the market is telling us and be accepting of it. You can't make money in the market if you're fighting the market. Okay. I'm not talking about, you know, when people, oh, well, CNBC said this, or, you know, this analyst is saying that. You know what? That doesn't matter. Even what I tell you doesn't matter. What matters is the market. If the market is telling us that we're wrong, we are wrong. We have two choices. Either we accept it and we take a small loss, or we say that the market is wrong, we are right, and we continue to stay wrong. And hopefully we're not down that much. But if we end up being down 50%, it's our own damn fault. I hate to put it like that. I know it's a little cold, but it's our own fault. The market was telling us when we were down 5% that we were in the wrong. When we were down 6, 7%, we were in the wrong. 10%, we're in the wrong. And what did we kept on doing? Fighting the market. That's how you lose money. Don't fight the market. I'm doing the opposite. When I'm short and the market goes down 3%, great, I'm adding to it. When it goes down 5%, great, I'm adding to it. When it goes down 10, I'm adding to it. Because the market is telling me that, you know what, it's going down. The market is showing me, so I go with it. I don't fight the market. And people, you know, you don't want to get to that point. That's kind of like more of a psychological thing, but it's not so much psychological. It's really just comes down to the numbers. Okay, if you see your account growing, that's the market telling you that the call you made was right. So for me, when it does that, I add to it. But if it goes against me, then I'm not adding to it. And I always make this analogy is that it's kind of like an employee. If you own a business and you have 2 employees, one of them's really good, they get there on time, you're going to give that employee a raise, especially if they're bringing more money in. But the employee that doesn't get there on time, that misses a lot of work, that costs you money, why would you give that person a raise? You would fire them. And these stocks are employees. These are companies that you own. So if they're not moving in your favor, why do you want to reward them with more shares? Why do you want to put more money into them? You know, so look, again, I'm kind of ranting here, but dollar cost averaging, like I said, I've never seen anyone make money with that. Everybody who's done that, they continue to get burned, because now instead of being down on one position, they're adding to that position. So it's almost like they open multiple trades on one stock. So, and And you guys are welcome to disagree with me. I'm not trying to, say this is the end all be all. This is just my opinion and what I've seen in, my 15 years of trading professionally, of doing this professionally, and now trading, privately. This is what I've seen. So, anyways, that's how I do it. And let me see here. Shinigami says he's just old, only reads chat in increments. Yeah, I like to just kind of, I like to talk to you guys. So I have the chat here, I have the camera here. I guess I could get used to talking to the chat this way, but I just get more into it, guys, when I just kind of just, let it go free and just, just kind of go off and just talk and let it all out. That being said, let me see, 11:44. Got to wrap up here in a minute. If you I got some positions here. Need to get into those. Give me a second here, guys.
Indeed. And Ross, just before I let you go, investors in the banking
All right,
space
so
this latest Credit Suisse data leak. It's been playing out.
and don't worry, I will get into the stocks that you're requesting to to review. I'll get into that. All right, so let me blow into this. So, okay. Anyways, 3M guys, if you have any more questions, again, just throw them in the chat, and I will go on my 20-minute answering your question rant. Anyways, okay. So McDonald's, another short. What's McDonald's doing? Okay, so look, guys, this is a stock that, again, it's kind of like leveled off a little bit. You can see right here. Okay, it's kind of like paused. I want to see McDonald's take a significant movement to the downside, and then this one could be a good one to short. Now, I don't mean if it breaks the lows, I'm shorting. It needs to break it with conviction. Okay, it needs to really break that low hard, not just like slowly creep like that. I don't want to see a slow creep. I want to see some real selling go into this. So with McDonald's, yeah, if this thing could break those lows with conviction, with power, this could be I will add to it. Okay. Until then, let me see here. This was some real nice movement here. What happened over here? You see this tail? What happened right here? That's what I want to see happen here. Okay, something significant like that. I'd like to see that happen. So, so McDonald's is good. Let me see. Let me go into my next position. Got FedEx. FedEx has been moving beautifully. So this one may pause. This I don't even know. Who knows what this one could really come down some more. But FedEx has been moving pretty good. Got a good. Let me see here. Where am I placing my stop on this one? I'm gonna like this movement here and right here. That's key. What was I here? 227.26. Okay. All right, so FedEx looks good. Still going with this one short. Coke. Guys, Coke is one of my few long positions, and this is a defensive. So what I was saying earlier, if you didn't catch it, this will be archived. If you want to get my take on the market at the end of the video or whatever, just, what I'm going to do is on Mondays, I'm going to come in here, I'm going to talk, I'm going to give you my take on the market. And, that was about 5-10 minutes of me just talking about, the markets, what to look at, talked about the Fed, talked about all of this stuff that we're hearing about. So if you want to hear my take on the market, you can, check out the archive, and I go off on I go off and basically talk about what I see in the market. But I mentioned in that Coke and the defensive stocks are getting some movement. Okay, but again, there's not a lot of loyalty in defensive stocks. They're only loyal when people are scared. The minute tech comes back, they will sell this stuff and they'll jump back into tech. But tech has been getting a beating, and so people are trying to seek shelter in these defensive stocks. So Coke is one of my few long positions, and this one's been, this one's not doing too bad, not doing too shabby. I really want to see some conviction. I mean, yes, we're breaking the highs, but I want to see some conviction here. Okay, I want to see some more volume. I want to see a real, kind of conviction power break to the upside before I add to it, because this is basically what I call creep. Okay, you had a big push right here. Okay, you had a big nice candle, and then it got very quiet. I don't want to see that. I want to see some real excitement. This same candle here, I want to see a follow-up and that same excitement, not some small little creeping after that, okay, because it could be a fake out. So we'll see what Coke does, but I really, until it gets a nice big push to the upside, I'm not really going to add to this one, okay? I got to see a nice break. If I get a good solid break, then I'll add to it. But until then, this creep movement, it just slowly kind of creeps up. That's not going to be enough for me to, really get behind this one and add to my position. So Coke is, yes, I'm long, but I'm not going to add to this without, seeing some real price activity going into this. What do we got here? By the way, guys, is the chat still working? Because everybody went real quiet. So let me do a test here. Either you guys all fell asleep, or you're just kind of letting me do my thing here and kind of watching me do it. But okay, cool, lurking. All right, just want, because the chat was like, there's a lot of stuff going on, and it got real quiet. Want to make sure my computer didn't freeze or something like that. But good. Okay, it's working. So Microsoft is another short. This is some pretty good price action here. I'll see this one level off though. Let's see this one kind of chill. It's it's been down. Last session it just kept moving down the whole day. I don't want to see that tomorrow. I don't want to see Microsoft. I mean, I don't mind, but if I'm going to add to the position, I'm not going to add while it continues to go down. I want to see it go down and then take a rest, a little pause, and then continue moving down. Okay, that's what I just don't want to see. Again, that's what I call creep. I don't want to, I don't want it to slowly creep. I want to see it move down, pause, and then continue going lower. Okay, so that's the same thing with Microsoft. Microsoft's good. I'm glad I've added to this one, but I'm not going to add to this until it kind of takes a break off of, kind of like stays off of the lows for a little bit before moving back down. So we'll see how that one goes. But with the market where it is and all the panic, this may just move down. But again, that doesn't mean I'm going to add to my position. I'm just going to, because when they're just moving down like that, I like to see a little bit of pause. I like to see the steps. Okay, you can see it happen. You see that lower high right here. I mean, the lower high. Then it kind of like levels off. It tries to come back and it has a lower high right here. See here's the first one. Here's the second one. Sells off, breaks the lows, comes back. That's what I want to see. I want to see this staircase movement. Okay, that's what I like. Not just a continuation to the downside. Because what happens is you can short it, keep shorting, and then get caught in a pop. And everything just kind of goes against you. So for me, it helps when they take a break and then they move lower. That just tells you there's a steady sell-off. So that's where you make your money. Again, if you didn't watch what I said, if you didn't catch the video in the beginning, where you make your money is in that trend. That's where you make a killing. Okay, but the minute it breaks out of that trend, it's kind of like it's just the stock is thrashing all over the place. It's hard to catch it. You don't know what it wants to do. So this one is a nice steady trend. Looks pretty good. Microsoft looks pretty good. So I'll just continue to let it, do its thing. Procter & Gamble. This is another one of my few longs that I have. I don't have that many. This is another long. Again, what is this? Consumer defensive. All right, so this is a defensive stock, Procter and Gamble. It's having a tough time getting over that 50-day moving average though. Okay, definitely having a tough time. And I'm not gonna add to this one until it really kind of, because if you look at this one, I'm long, but look at the trend. Okay, this one is still kind of moving down. All right, you could have a lower high right here. So this is why I do my scans, because I think Procter and Gamble, I may just dump this one tomorrow morning and just get out of it. I'll let it do its thing though. Okay, I'll let it do its thing. This is a very powerful stock, and again, it's a consumer defensive. We're in an environment of a lot of panic. Okay, and people are going to seek safety in these types of stocks. So yeah, I'm not going to sell this one. I'll continue to hold it. Just have my stop there. I won't really add to it until I see some. Well, one, it needs to break above that 50-day moving average. Has to do that, and just get some real excited buyers in Procter and Gamble. If we can do that, you know, I'll add to it. But until then, I'm just kind of chilling with my position on Procter and Gamble. We'll see what it does. Honeywell looks good. I like this right here. Okay, this is how they're all kind of like looking. They're all setting up. So Honeywell is good. Let me see what my stop is on this. Yeah. All right, so this one's good. Let me go into the next one. Walgreens, another consumer defensive, but this one I am short. You can see why. It has this one has 1 second. Okay, so downtrend. Okay, so it doesn't matter. A lot of people are like, oh, you should buy defensive stocks. What matters the most thing is what as I said, what is the market telling you? If the market is telling you, hey, I'm going lower, then you got to listen. You got to listen to the market. So Walgreens, this is a good short. I added to this and I want to add to it some more. So if I can get a nice break to the downside tomorrow, this may be one where I again add to the position. We'll see how this one does. But so far, you know, steady movement. Comcast, another one. Comcast looking really good. Steady movements. Everything looks good in Comcast. Thermo Fisher. This one has been fantastic. I've been adding to this. And it's only 2%, but again, I've been adding to this. I like what's going on here. It bounced off the 200-day moving average, kind of stuck to that 20, and then came back down and it just couldn't hold it. So I broke that 200-day moving average. This one looks pretty good, yeah. So just continue to trade this one to the downside. I mean, guys, a lot of these kind of look the same. It's just patterns. This one's a little bit different. This is Freeport, and I am short on Freeport, even though it is trading above the 50. Okay, that's something that I'm, kind of watch out for. But this one has some. You see this movement back here? This was some really big. Movement to the upside, and then it stopped right above here. Stopped right here. Okay. Now, if you look at this, you can say, well, you're trading above the 50-day, trading above the 200. Why are you going to short something that's above the 50? And that's a valid point. But if you come back over here, you see that you have a high that it failed to get above, and it just pretty much, it did pretty much collapse right here. It couldn't hold it. It broke down through all the moving averages, came back, but you have a lower high right here. This was your first high back here, and it tried to come back, but it failed at a second high. So you had a lower high right here. This is why I went short this one. As it moved up to this side, the minute it got right in here, this is where I'm starting to build to go short on it. Okay. Because one, that lower high is a big thing, and it couldn't break it. I mean, if you were to look inside this candle, you would see that there was a lot of rejection in price right here in that tail right there. Okay, so got to look at the tails and the wicks. So that's why I went short. Now, if this stock reverses, okay, and it goes up through the high, I will lose my opinion and I will get out of it. Okay, so I am prepared. I'm prepared for if this one goes the opposite direction, it's fine. It could happen. But I think that this one has finally run out of juice. And I think it's going to take out these the 50-day moving average, move back to the 200, and hopefully take out that 200. All depends on the market. If the market starts moving lower, I mean, the thing is this is copper, so you do have inflation and whatnot. This could be another one that people are running into as a kind of like a defensive for inflation. But I don't know. I see more potential to the downside on Freeport than the upside. If I'm wrong, I'm wrong. You just get stopped out, move on to the next trade. But so far, this one looks pretty good. We'll see how it behaves this week. This is going to be one that I'm looking at this week. We'll see. Shane, you're still here. Good. All right, cool. Yeah, it's already hitting 12 o'clock. So getting to that point now where I'll probably wrap up the stream in a moment or two. Starbucks looking good. This one, this is going to be a good week, I think, for Starbucks. If Starbucks could break the lows, that's going to be awesome. That's going to be really good because it's kind of just been, kind of holding them. So if we can see a break to the low on Starbucks, that's going to be awesome. And we'll just wait and see. If it continues to kind of level off, then it continues to level off, and I'll let it chill. The other thing too is even if the stock isn't doing anything, some will just get out of it and they'll say, hey, it's not working. The only time I do that is if I want to get into a different position. Let's say, I don't know, let's say there's another stock that looks pretty good. I don't want to just, you can't keep adding. Okay, so what I'll do is I'll take my weakest stock or a stock or a position that's not really working out, and I'll basically trade that one, sell it, close my position, and open up a different position. But if there's nothing really on the table, I'll let it do its thing, okay? Because it could just chill for a little bit and then it takes off. So sometimes you got to just be patient. As long as it's not working against you, for me, that's fine. As long as it's not working against me, I'll give it some time again until something better comes along. Then I may do it. But for the most part, I like to kind of let them do their thing a little bit, give it a little bit of time. So that's the thing with Starbucks. It's nice here floating around at the lows. Let's see if it can break these lows. That's going to be awesome. So we'll see. We'll see what that does. So this week I'll be looking at Starbucks closely to see how this one's behaving. Facebook. So Facebook is this is looking good, guys. Tomorrow with Truth Social, Trump's new stock that the Digital World acquisition and whatnot, that's going to give Facebook a nice little hit for sure. So depending on how many people got excited about Truth Social, it's not going to do any favors for Facebook. Okay, especially the amount of people and groups that Facebook has censored. I'm pretty sure they are happy to leave Facebook and go to Truth Social. Now, are they going to pull the plug completely? Who knows? Okay, this really doesn't. This is more getting into like company versus company and investments rather than trades. But Truth Social could take a good market share from Facebook, because that's the other thing. When you actually take a dump on your customers and you attack your customers and you punish your customers, they eventually are going to get to the point where they're not going to bring their business to you. They're just bringing their business to you because you are the only one on the block that offers that particular product. The minute a competitor opens up down the street that has a similar product, they will leave gladly in droves and go support the other business. So Facebook did it to themselves. You should not destroy your customer base, divide your customer base. That's exactly what they did. That is, in my opinion, why you're seeing all of this go on. And now with Meta, and I will continue to call it Facebook. I don't care. It's called Meta. I will continue to call this one Facebook. But they don't really know what they're doing. They're having some problems. So this is more like an investment side of things. But look, here's the thing. Tomorrow, there's going to be a lot of excitement, and there's going to be a lot of chatter about Trump's Truth Social. And that chatter is going to create energy in the market, and that energy in the market is going to negatively impact Facebook because it's putting Facebook on the defensive. And you're going to see some people just say, you know what, now that my neighbors and my family or whatever, everyone is all excited about Truth Social or whatever, I have my Facebook shares, maybe I should sell them. You're going to have these retailers questioning that, and that's not going to do any favors for this stock. So this particular stock, Facebook, really excited to see what this does tomorrow and in general this week, now that this is the first week that Trump's social network app is going to be out. We'll see how it affects Facebook. I'm shorting it because, again, it's not doing Facebook any favors. So we'll see how this one takes it. Okay, and it could come. Who knows what it'll do? But again, this is one that I'll be looking at to see how this one's kind of behaving, because it's going to be really under the gun this week. UPS, again, this is another one, just nice. Look, it had a huge gap up, gave it all back. It's closing the gap. I think it's going to go to the 200, fail. I think it will. It's already started to fill the gap. Now, I don't know if Sparrow is still here, but Sparrow has a saying that I love, and she's absolutely right. They don't always fill the gap. They don't have to fill the gap. Somehow we have, kind of put this out that if it has a gap, it's going to be filled. That's not true. Okay. It may not fill the gap, especially if it's going to the upside. It may continue to run. It may take a while before it fills that gap, may not fill the gap. Who knows? But when it does start filling the gap, most of the time it finishes the job. Okay. It's kind of like, once it gets busy, it doesn't stop. Once it starts closing it pretty much closes the gap, and does that. So it's already, UPS has started to do that right here, and it did so pretty hard with this candle here. And since then, it's just slowly drifting lower, slowly closing this gap that we see right here. So yeah. I already like the trend in general. Okay, I really like that this is, already getting sold off. I think this is, not doing any favors for UPS. But the fact that there's a gap here, I know that's the other thing. I know there's a lot of people out there who are seeing this gap and they're shorting it because they're just like, hey, it's going to fill the gap. A lot of times, what you're seeing, a lot of other people are seeing, and you have to remember that this means a lot. If these patterns work, because people have programmed themselves to believe that when the stock does this is if A happens, then B is going to happen, right? So like the cup and handle, that's a very powerful pattern because people now see it and they expect the stock to go up. It's just pre-programmed in us. So that's what's kind of going on here with UPS. People are seeing the gap and it's filling it, and you have people shorting it until it closes the gap. Which if it does that, it's going to be near or under the 200-day moving average. So that's good for me. I just started a position on UPS. So as I haven't added to this yet. But as it moves lower, I will do that, because look, it gave it all back. That's not a good sign. It gave it all back. And now it's breaking under the 50-day moving average. All it needs to do now is break the 200 and then break the low and forget about it. It's gonna do really good to the downside. So UPS is one that I like for. I just started this is a first position on UPS. So as it moves lower, I'll continue to build a position on UPS and add to my short. All right, so we got Lululemon, and this is another one. This was a big favor. You know, CNBC was pumping this one quite heavily, and you can see it's been pretty bad. Nothing more to say about it. Just started a position on Lulu, so it's really not doing anything. And actually, let me go down here. So yeah, you guys can actually see the other two positions that I have here. Lulu. Okay, so I'll continue to watch that. We'll see how it does. Lynn is so Lynn is one of my shorts. If this moves up like 2-3%, I'll be out of it. Okay, this is one that's running against me barely. Okay, but you know, if it kind of moves up, you know, I'll get stopped out on this one. We'll see. And AMD is a new position, and this one's getting pretty close to my stop, so may get stopped out of this one tomorrow if really kind of bounces right here off of that 200-day moving average. If it does not bounce though, and it breaks that 200-day moving average and it heads to the low, right, that's going to be really good. Okay, that's going to be about, what is that? It's like 12%. So that could be pretty good. We shall see. And that's it, boys and girls. Those are, you know, that's what I have for you. Let me see here. I'm going to take a break right here, guys. Purpleton, no problem, man. Thank you for joining and hanging out. Appreciate that. If you didn't catch the beginning of the stream, again, I broke down the market. So if you are trading the market, do me a favor, watch the first 10 minutes of the stream, because that's going to help a lot of people to kind of know what's going on. A lot of people are getting kind of just pushed around all over the place. Talked about the trend, talked about all this stuff going on. So catch the first 10-15 minutes of the stream. That's where I just basically, you know, talk about the markets, what I see them doing, and you know, it will help all of us to kind of just chill and wait and see what's going on. Unless you're an experienced trader, even if you're experienced, you know, definitely give it a watch, because there's going to be some movement. There will definitely be some movement. But again, appreciate you, man. Thank you so much for hanging out with me, and you know, just watching the stream, the channel. Appreciate all of you guys. I'm going to take a quick break here. I'm not ready to kind of just end the stream just yet. I know it is, you know, I got to pretty much stop the stream in a little bit, but I'm not ready to do that just yet. So I'm going to take a quick pause, a quick break right here. I'll come back in about 5 minutes or so, and then we'll I'll take the 2 reviews that I have in the queue and a couple of other things and wrap up. So probably in the next 20 minutes or so should be wrapping up the stream. But I'm going to take a quick break right here, and then come back and wrap it up. So let's see here. Where's my Streamlabs? There it is. So where's my pause screen? I really gotta like program this. It's been too long. I was done. I was done. But well, I was done going through my positions, Sheeny. But I wanted to go through your go through your reviews. I know you requested a couple of stocks, so I want to do that. There's 3 stocks in the queue. Definitely want to cover those. I'm not going to ignore you guys, what you guys have put in there. So Sheeny, you are not going to be ignored. Okay, I'll come back. We'll look those pull up the charts on those, and maybe 1 or 2 other things, and then call it a night. But I'm just gonna take a quick break right here, grab some water, and get up out of this chair for a little bit, and then I'll come back. So I'll catch you guys in a little bit. All right, guys, I am back. Let's go ahead and take these. See here. These reviews for Shinigami and Mspar. So Shini, you are not in the room yet, or you just, I see that you're offline. That's what it says at least. But apologies for not getting to this sooner. But I'll still go ahead and chart it. Home Depot. This one looks really good for a short. Yeah, this one looks really good for a short, man. I like Home Depot. I would short it. Maybe if I get stopped out of one of my positions. Yeah, actually, this doesn't look. This could be a really. This could actually be a decent short, man. When do you have earnings on this thing? When do you have earnings on? Oh, okay. That's why. Earnings is that's why I didn't short Home Depot earnings. I do have this one flagged, so I'm looking at this one, and we'll see. They report today. They are reporting today, so maybe tomorrow I'll get into it. We'll see. Who knows? It could be a different stock at that point. It'll be a different pattern to a lot of price movement on Home Depot. So yeah, I'm staying away from Home Depot. Obviously, whenever they report, I am not gonna trade it. So, but overall, on Home Depot, this is one that I will put a big fat bearish sign. So this one gets bear. Mighty Warlock. This one was also requested by Mighty Warlock. So same thing. This is a bearish position. Mspar requested J&J, Johnson & Johnson. This one is turning. This could be a really good short. Could be a really good short. I don't trade Johnson & Johnson, but if I did trade Johnson & Johnson, yeah, this one looks like this could be a really good short. So this one also gets the bearish label. That being said, I'm gonna go ahead and close the. Oh, you're still here. Okay, that's weird, Shini. It said offline on the warp world thing, whatever. Close that. But yeah, so Home Depot. That's if I don't know what you were looking at with it, Shini, but if you were looking at short, me and you were on the same exact page, my friend, because I like this one. I just even when I saw it, I'm like, man, this looks like a good short. Of course, I noticed right away that they were reporting this week. This was on Friday, so I'm not going to get into that while they're reporting, but we'll see how this one does tomorrow. It'll be interesting. I have another one, I think, here on my flag list, so that I kind of wanted to go through really quickly with you guys. HRB was yours? Oh, I didn't. HRB, I didn't. That one didn't come up on the. It came up as Home Depot HD. So let's chart HRB. Okay, so this one looks pretty good for for a long. This right here, I like this activity. It broke through the 50 really well, and then right here, this day here, it broke through that 200-day really nicely. What I call with conviction. And why do I call it? Because of this guy right here. You got some nice volume. Okay, So it broke through that 200-day, even though it's not a huge candlestick. It broke through it with some pretty good volume, and I like that. So for me, that this would have been the key time to start looking at potentially going long on this stock. That would have been my, my signal that it's time to jump in and go long. Since then, it basically rallied up a little bit, kind of just chilled, didn't do much, and basically it's just been creeper. This is what I call a creeper. Okay, they break up and the movement doesn't fizzle out, but it just kind of steadily starts climbing and moving a little bit higher, but it's like inching up a little bit of piece at a time. So the frenzy isn't there. I would really like to see some frenzy on HRB. I would like to see some more movement to the upside, some breaks with good volume. And until then, I still see this as a good long position. I wouldn't be buying long here. Again, I would wait for a break with some good volume. But if you bought it like right up here, 24.53 or so, this would have been an ideal time. If it comes down to that 24.53, maybe it might be a good buy, as long as it doesn't break that low right here. And this is the low. We got a low of what, 23.91. As long as it doesn't break that, I think that's pretty good to go. And that's like a 2.5% from the break to the low, about 2.5%. So and you're up now about 2%. So again, 23 or 24.53. I wouldn't pay more for that if I was going to go long. And what is it? That's about 62 cents. And yeah, so this is good. You may be catching this one as it's getting ready to move higher. It's already at these highs, so this is a good one. I give this one a bullish rating for sure. And like I said, I would have tried, if I was going to get into it, I would have been right here. This is where I would have been throwing some money into it. No more than 24.53 though. You've been looking at this long for a retracement back to the previous hybrids. Yeah, and I wouldn't get out too if it breaks the highs. I wouldn't necessarily get out. I would continue to hold it, because it could continue to move. Who knows? This may be a creeper though. It may be a slow movement. Who knows? But either way, bullish on this one. This is actually a good stock to look at for options. This is one that I would look at for an option because it's $25. Let me see what do you have on options on this thing. And it just it reported earnings, so you don't have to worry about earnings for a while. Yeah, these are who knows? Maybe I'll this is a kind of stock that I made stocks that are like $25 and under. I may just try to get some buy an option in them and start studying the what is my what's my win-loss with the options. So anything $25 and under, I'm thinking about just playing these as options. We'll see, because normally I don't like to get to you can't get real heavy on those kinds of stocks or shares, because like I said, if they can quite very easily blow past the stops and really kind of run. So the lower the price, the more significant the movement. So for its contract. So slow mover. Yeah. Well, not bad. I would, look, here's how I would do it if I have an option though. Okay. This is pretty much my stop right here, which is 23.91. If it breaks that, I would just get out of it. So, whatever the option is at that point, I would just treat it like shares. That's how I'm looking to trade options, and then from there you can start getting a little bit fancy with it and try and, covered calls, things like that. You're trying to get some income from the positions, but really I don't want to do that. I want to just kind of trade them as they if it was just shares, straight up shares, and kind of see how that works independently. So we'll see. Another one that I'm looking at is Ross Stores. This I like this one for a short. I just didn't get into this one because I didn't like the risk reward on this one. Very, very, I kind of wanted to see some kind of calming down when they really kind of go blow to the bottom like that, and they're breaking, they're stretching outside of the ranges. I don't want to short when it's stretched past its range. That just doesn't, you're getting it way overextended, and then it can go against you. So I don't really like to do that, and that's exactly what happened right here with Ross Stores. Now it's kind of, it's pulled back a little bit, so it's not bad. But when I was looking at it, was right here. Okay, this is when I was looking at it, and then of course it kind of popped back to the upside. So I wouldn't have any problems shorting this thing right here. I wouldn't have any problems doing that. So if one of my positions gets stops out, that's why this one is here. This one's flagged because as long as it's above 91.79, I will probably go short on this one. Consider this one for short. Earnings on this one is coming, it's next month. It's not bad. So I have some time, to have a little bit of time to hold on to this one. I'd like for it to, have more time, but still not bad. So we'll see what happens with Ross tomorrow. We'll see what happens with my positions, but if any of them get stopped out, Ross may be in play for a potential short. You were looking at Ross too? Yeah, it looks good. It looks, look at, how can we argue with the trend? It's been under that 20-day. Looks like it's moving lower, so really, really nice looking chart on Ross for a short. This could be a good short. AMD, I'm already short in AMD. I already went short on this one. May get stopped out. This one may stop me out tomorrow, especially if it kind of breaks the highs that it had of Friday session. Then probably can get stopped out. So then we'll see what I jump into after that. Could be Ross. That being said, let me take this one out for my watch list. UMP, Union Pacific. This is one that I'm looking at for. Wait, let me make sure here. So yeah, UMP, Union Pacific. Looking at this one for potential short. Okay, so what I like to do is have shorts ready so that if I get stopped out on some of my other positions, I already have other stocks that I was looking at. Okay, and straight go into them and have a lot of a lot of positions rather than just having all of for me, you don't want to have all your capital just piled into one position. That's very dangerous. What you want to do is what I like to do is I like to have my capital spread out over over a small amount of a good amount of a handful of stocks. Okay, and kind of like treat it like a, like a basketball team. Okay, you have your players. Some of them may be performing a little bit better for you, but you're not just banking on one player. You have a team. So that's what I'm trying to do. So with Union Pacific, if any of my stocks get stopped out, this may be one that I jump into for the short. On this one, this could be, this could be a really good short. So we'll see. I would feel very good with we'll see how it opens up tomorrow, because this thing could open up down tomorrow or whatever. I don't want to go short on this thing, when it's already starting to move. I'd like to kind of get it when it just cracks. So, I'll miss out on this, but if I can get it right here, 252, short it, above 252 with like a 2%, 1.5% stop, that's fantastic. I'll do that. So that's why I say this could be a good short, because whenever you're risking a small amount like that, like 1.5%, your reward to the upside is, is really, really nice. You have a very nice risk reward on that one. And I'm always kind of looking at that, the odds. What are the odds? If I'm wrong, how much am I going to be wrong? If I'm right, what am I going to get out of this? And this could be, this could be like 1.5% in exchange for, like 6-7% or something like that. So could be a good short. We'll see how this one plays out tomorrow if I do get stopped out. Bank of America, looking at this one short. And this one's a bank. I said earlier in the beginning of my video when I was talking about the market, the banks are having a tough time. The banks are weak. Okay, the only thing that's helping the banks is the yields right now, but they're not really even helping them that much, because they're pretty damn weak. So Bank of America is another potential short, if any. Like I said, I have a backup in case something gets stopped out. Home Depot, of course, I'm already looking at that one, but they reported. So after they report, we'll see. Monster Energy, Monster Beverage Corporation. Saw this one. I normally don't trade Monster, but this looks good. And if you look at all of these patterns, you can see like they're pretty much all doing the same thing. They're all heading lower. So that just kind of tells you what the market is doing. Clack, I don't really care for this one. Okay, this is a little too much risk. This is a very volatile stock. I don't want to risk more than 5% on my trades. And Clack would be risking over 5%. Nvidia. Now, Nvidia also is another mover. This would be risking over 5%. So I have them there because I think they are moving lower. But, I don't want to take that much risk on these two. So they're just kind of watching them. These are big movers. If they can swing to the upside and I could lower, or instead of being, getting stopped out and being stopped out at 7%, if I can it gets a movement to the upside, and somehow that closes that that risk, and maybe chops it down to half, or maybe 2 to 3%, I may get in. Okay, but anything after 5% is a no-go. So Clack and Nvidia, those I'm watching in case they kind of move up to the upside, and I can go short at an even better price. That I'm willing to do on Clack and Nvidia. But at these prices, no. So this week, tomorrow, we'll see where they're at, and if they really kind of come in, I'll get out of one of my positions and throw it into Nvidia. Whatever's not performing that great, maybe maybe Lin, who knows. But that's where they're at now. I wouldn't do it. Now DocuSign, this is another one. Look at DocuSign. That really came in on Friday. But this is another one where it's like a 6% risk. The stop is gonna it could set like a 6% stop. I don't like to do that, yeah, you can lower your capital or whatever, but just talking generally on the stop, when it's like a 6%, I don't really want to do that. I want that to be a lot less. So anything over 5 is goes on the watch list, and basically at that point it's like, I want to get it under 5. I want to get it under 5. So, and DocuSign is this one's going to be a big mover. This one could really tank. So we shall see. I mean, it's already kind of tanked though. I mean, look at this. Look at DocuSign. It's down a good 60% from the highs. It's already got hit, but it could continue to get whacked and maybe go into like the 60s. Who knows? I have no idea where it can go. But this is one of those where when people basically say they had enough, they could really drag this one down. So that's why this one's on the list. That's pretty much it. Ross Stores, Union Pacific, Bank of America, HD, of course, Monster Energy, Clack, Nvidia, and DocuSign. So, and Pete Stash says, do you run into the issue of spreading a lot of positions and then they're highly correlated to the overall market moves? Yeah, that's the thing. Like they absolutely are correlated. So that's how you can tell where the market is starting to turn, because all these positions, all of this, the pattern starts appearing on every single stock. So it's very hard for the market to, it means a lot of stocks have to correct. If it's 1 or 2 stocks breaking down, it's not a big deal. So here's the thing. When you look at, when you have a day in the market where the market's down like 500-600 points, if you look at these, at the actual stocks, like if the Dow is down like 600 points, go into the Dow 30 and see what are the stocks doing. And a lot of times you'll see that, it might just be 1 or 2 positions, 1 or 2 stocks that are bringing down the whole Dow, and that's important. That's important to look at, because if they're like, oh, the market's getting beat up, but it's really just 1 or 2 leaders, or you see this a lot with the spiders and Nasdaq and whatnot, because of how they're weighted. Okay. They're not equally weighted. So, but that gives you a good gauge. Okay. So you don't really know what the overall market is doing if you're just kind of looking at the general, Dow, general S&P 500, general, Nasdaq. You have to kind of pull up what's in there and then see, because a lot of times it could just be a few things. Like, again, the market has been moving higher, but the majority of the market was down. I mean, big time. You look at the Russell 2000, all down. You just had Apple that was up. You just had, Amazon that was up, or, all of the FANG stocks that everybody loves. Everybody and their mom buys the FANG stocks, right? A lot of funds just crazy about the FANG stocks, all these tech crazy, strong believing investments. Oh, all these tech companies and Tesla and whatnot, right? So you just had a handful of companies that were moving the market higher. But if you looked inside the market, you would see that the majority of the market, 80% of the market is basically down in the dumps, in bear markets. So the market they're telling you, and you're seeing that the market is moving higher, but the majority of the companies is moving lower. So I like to trade just looking at the individual companies, not so much looking at the market itself, because these are the market. So my first go-to is not necessarily, like, for example, a lot of people, when they first get into their trading desk or whatever, they right away look at the market. I look at my positions first, then I look at the market second, because wherever my positions are going, usually that's where the market is going. So they're kind of telling me the same story. So that's how I do it. Real Jack Credit says, the Real Jack Credit says big caps will mostly follow SPY when there's volatility, like what we have now. There's difference in beta, so SPY might go down. Exactly. Yeah, they're gonna follow. So I just, again, I always just kind of look at the positions, because wherever they're going, they're kind of going. I didn't look at the market and say, oh, the market's moving down, let me go short. I was actually gradually going short as the stocks were, breaking their lows. And then the market, you look at the market, it's like, okay, yeah, that's what's going on. And again, I'm not trading, mainly what I trade, the Dow 30, the S&P 100, and the NASDAQ 100. I don't really stray off of that. So I'm pretty much trading the market, the S&P 500, I look at that, but I try to stick to the NASDAQ 100 and the S&P and S&P 100, Dow 30. That's plenty. There's for me, there's plenty enough in those markets to find something to trade. Sometimes you can't sometimes there's a lot of movers in them. So, and I'm trying to have my book between 10 and 18 positions. That's what I like to kind of keep it at. Spread around, capital spread around that many positions. So in a way, I'm kind of like building my own fund, my own small fund that I'm trading. That's how I like to trade it. SPY held up because of big tech. Yeah. So, guys, I'm gonna just kind of wrap it up here. Just kind of wrap it up here with what I was talking about. And basically what I said. Let's go back to what I started off the stream with, and let me see here. I'm just kind of curious real quick. All right, so yeah, I'll just end the stream. Yeah, it is late for me, Fubar. It is 12:50, so I need to get to bed, man, because you need to make sure you have your sleep. If you are going to be trading these markets, you want to be clear-minded. You want to be in, the best health you can be in, and that means getting some sleep. So I gotta bounce a little bit, but look, like I said, just kind of wrapping it up. Okay, here's the thing, guys. For those of you still with me, hanging out. Okay. When the market broke right here, you had a tremendous amount of capital called the plunge, not called, but you have a team called the plunger team. For those of you who don't know, you should look up the plunger team. Okay. Because what the plunger team is, they come out and they rescue the market. They financially engineer the market and move it to the upside. They rig the market. Okay. That's what they do. That's what happened right here. All right. What the heck was that? I heard the thing. Anyways, this is what happened right here. The market was coming down big. You had the plunger team come in, put a lot of money in the market to try to get it back up. They are coming in with $20 to $50 billion a day, and they are buying up stocks through buybacks and through all of this stuff. Okay, because if we break those lows, we are going to go. Like I said in the beginning of when I first started talking about this, we're going to go headfirst into a crash if we break those lows. Okay, that's what I think is going to happen. I think it could get very ugly. It could be a pretty serious crash, and the Fed knows this. Okay, they are panicking right now, and they are trying to hold up this market as much as they can. Okay. But again, I said, before, this is not the test. The tests are at the highs, okay? Not the lows. The tests are at the highs. So if they can't break this market above these highs, above that 50-day moving average, this market breaks the lows, it's going down. And it's going to be, I think, brutal, okay? So if you're short, it could be very good for you. If you're long, please be careful, have stops, whatever, because you may be in for a ride. Okay. You got a downtrend that is forming, and they're trying to swing this thing back into an uptrend. They're throwing tremendous amount of capital every day to try to get this market back up. Okay. But you have the lower highs that are already forming. You got the lower lows that are already forming. So So what are we doing here? Okay. We want to see, again, here's what I want to see the market do. Okay. I would like to see the market rally back up. Okay. So you can see here, okay, we got these highs. I want to see the market rally back up and fail right here, lower than these highs. I want to see it rallied up to about right here, 452 or something, and fail. That's what I'm looking at. If it can do that, it's going to set itself up for some nice shorting activity. You can make a lot of money if you're short. That's what I want to see, because the market has been following since January. Okay. And again, you just kind of look at this thing, lower highs, lower high, lower high. They failed to break the market out to newer highs, and they've been having a tough time, and it's had capitulation all right up here in the in the first of the year. And this is when they came out heavy. This is when they came out with the big guns, and they stopped this selling from happening. They threw a lot of money in the market, and what happened? Once again, it failed. It could not get above the high, could not get it tried 2 times. It tried twice to get above that 50-day moving average, failed twice. So I mean, just looking at it, I want to see the market try to make another run for it. Okay, I want to see it to try to go up there and have that third failure at the high, and that could be that could be good. Now, if it breaks though, okay, and if they do get it above the 50 and it breaks the highs and whatnot, if they get enough buyers and they rig the market enough to do that, and they take out the high, then they may push the market up back into an uptrend. And again, if they do that, that's going to be at the expense of Main Street. Okay, that means they're going to say, you know what, the heck with inflation, the heck with all that. We just want to make sure the market goes up higher. Okay, so it'll be very good for the wealthy, for everyone who's in stocks with big money. Very good for them. But if you're not, you're going to feel the pain at the gas pump. The inflation is going to go through the roof. So it's basically a trade-off. Am I going to save Main Street, or am I going to save Wall Street? Okay, either way, either way, I'm making money. You should be making money too, because you can go long if they throw this thing back into its uptrend and they rig the market. You can go long with it, and you'll do well. If they can't do it and the market and they stand back, if they stand back and let the market be a free market and it crashes, you can make money on the downside. It really doesn't matter at this point. Okay, it's just, this is where we're at right now. We're at that point where's the market going to go? And they're going to come up with all kinds of nonsense. Everything that goes on, they blame it on Russia. I'm telling you, man, it's just like, Russia, the market's going down. It's Russia's fault, and the war. The market was up. Okay, this whole Russian situation has been going on for a while. They didn't mention it when the market was on the tear to the upside. Okay, but now that the market is kind of having some problems here, it's everybody else's fault except the Fed, except of Jerome Powell. It's not, it's Russia's fault. It's I don't know. They'll find something to blame. Oh, it's the truckers' fault. You know what I mean? It's ridiculous. It's all of this is because the market has been rigged and financially engineered for so long. And, it's time, guys. We are finally at that freaking point. And, after years and years, I really believe we're at that point where if we break those lows, it is, strap yourself in. We're, this is going to be a roller coaster to that downside. And, yeah, it's going to get crazy. So, again, if you are long, be very careful, man. This is not the time to be long. Okay. The market is not in an uptrend. The market right now is like thrashing around, trying to get back to that uptrend. So be patient if you're long. If all you do is buy stocks, be patient, be careful, because this right here, this market is not that market. And you can get caught on the, on the downside. And if this thing does break, it's going to be nasty. It's going to be really nasty. So for those of you who are new or who are just buying stocks, be careful, lower your exposure. If anything, just be careful. Doesn't hurt to be on the sidelines. Okay. I'm not a financial advisor. I'm not, those days are done, guys. I'm no longer a financial professional. I am just a private trader giving you my 2 cents and trying to keep my community from getting hurt. Okay. So if you are long, if you are new, if you're just buying stocks, be careful. This is not that market. Wait, if wait until if the market does get into an uptrend, then you can get back into that mode. Then it's good, because then the market is up. They're going to, keep it moving higher and all of that stuff. So it's good. But until then, be careful, because we are not in that market. And if we if we fail at that third high and we break the lows, just try to learn shorting, guys, because there's going to be a killing to be made. I'm telling you, things can get hit and whacked really hard for another, who knows how many percentage points. That being said, guys, it's 1 o'clock in the morning. So I am, how long though? I don't know, man. It could be, look, as long as the market it wants to go down. That's the thing. You have a lot of people who, they think they know. I'll tell you, the only thing that matters is the market. Okay, so as long as the market is selling off, it will sell off. The market does what it's going to do. And you have a lot of people gauging, it's going to be a sell-off for, it could be another 1 or 2 years. We might experience kind of like a sideways market. Who knows? We may not. Nobody really knows. I don't know. No one really knows. The only thing that matters is the market. When the market is lower and lower and lower every single day, and it's making these lower lows, and you see it on the chart, just let the market do its thing. As long as the market is moving lower, go with it. Just go with it. It doesn't matter. It's just like how I said in the beginning of my stream, right here, when the market's moving up, that's where you make your money. The trend is when you make a killing of money, whether it's a trend to the upside or a trend to the downside, because all you're doing is you're just riding it out. You're adding to, I'm adding to my positions, and I'm just trading with that trend. And it's just, as long as it's moving, you make a killing. You make a lot of money. So, and when it breaks, then you stop. Once it breaks, that's called, market sentiment is gone. Okay. The market is no longer trending anymore. And you got to listen to the market. Above all, before you listen to me, before you listen to CNBC, before you listen to even yourself, okay, because we all have opinions. Lose your opinion, lose all that. Just look at what the market is telling. The market is enough to tell you that, I know it's kind of like simplified like that, but it really is, man. It really is. You have CNBC every day coming on telling you why it's doing this, why it's doing that. It doesn't freaking matter. It really doesn't. The only thing that matters is what the market is doing. And if it's going from, 1,000 to 900 to 800 to so on and so forth, it's going lower. So you have a decision. Either you trade with the market or you trade against the market. That's it. And as long as the market is trading in that direction, just trade with it. It could be a year of upside movement. It could be 5 years of upside movement. It could be 6 months. We don't really know, but while it's doing that, you go with it. You just go with the way the market is taking you. So never try to fight it is my thing. Never fight the market, man. Just go with it. Trade on the side of the market. Plunge protection team involves the New York Fed, I think. Yeah. The plunge protection team, man. They a lot of people don't know about them. They are the ones who come in with billions of dollars every day and prop up the market. That's what they do. But can they? I don't think the plunge protection team is going to be able to save this market anymore. At some point, the market, you're not bigger than the market, in my opinion. Now, they may do it. And if the market breaks the highs, I'll lose my opinion. I'll go long. I'll start going long, because you'll see it you'll see the stock starting to all come back, and I'll go with it. I'll go with whichever way the market is telling me it wants to go. So we'll see if the plunge protection team could actually do that. We'll see. Bulls take the stairs. The bears jump off the roof. Yeah. Elevator, right? So, but I try not to place targets. I try not to, place targets or look at this and this and that. You could have targets. I'm not saying you shouldn't, but the most important thing is whatever the market is doing for you. And again, I mean, it doesn't matter. One of the strongest stocks right now is Apple. Okay, and they're having a tough time. Apple's starting to break down. Okay, Apple was like was super strong for a long time. This stock it just kept on going. Apple is having some difficulty here. Okay, I'm not saying Apple's a short just yet, but it is having some difficulty. And Apple pretty much is like the market. Okay, there's so much of the market that it's just ridiculous. Anyways, with I don't know why I brought that up. Guess I'm tired. But yeah, just okay. So the reason I brought up Apple is you have a lot of people who are strong believers in Apple and they buy it, and investors type mentality. But now that you got to look at this chart, what is it telling you? What are the prices telling us? Okay, once it breaks to that 50-day and it's moving lower, the stock is telling you it's getting weak, it's getting tired. Okay, where it was just kind of on a tear, constantly hitting new highs. Now it's done. It's tired of doing that. It's breaking a key moving average, the 50. It got back above it. Okay, but what is it overall? What is the stock still telling you? It's telling you it's moving to the side. It's trading sideways. Okay, but you have a lower high here and you have some lower high here. So if you really kind of zoom out, you can see that you have a downtrend that could be forming in this thing. Okay, overall it's bearish sentiment that's going on in Apple. Now again, I'm not saying this, I wouldn't short this thing. There's not enough really movement in it. Okay, this thing can get back above the 50 and move to the upside. So Apple to me is going to be something to look at with the market. If Apple breaks above the 50, breaks these averages, it's basically going to be the market, okay, doing that. So Apple can do that. Apple can actually move the market if it goes if they get enough buyers, it could do that. So we'll see. But guys, I am drained. I'm done. This was a very good stream. Look, if you're not following me, you know what? As a matter of fact, guys, for those of you who are still in, I have something for you. Okay. This is very important that I want to give to you guys. Let me see here. Okay, so here you go, guys. This is for you. This link right here. If you're not following me on Discord, click on it and follow me. I'm going to be doing all the updates there. Okay, so this is the goal for the channel. Monday nights, I'm going to be doing a stream at 10 o'clock. Okay, 9-10 o'clock. Okay, that's what I'm looking at. Okay, so I will be streaming on Mondays in the evening. That's going to be a late night stream. Okay, so I like it, and that works for my schedule. That seems to work pretty good. And on Friday at the market close, Friday at 3 o'clock to market close. Okay, so I'm going to be trading late night Monday. Okay, not trading, but looking at the market. Talking to you guys on what I see for the week, what I'm looking at with my positions, and basically just kind of give you guys an update on what's up with me, what I'm looking at, what I'm doing, all that stuff. Okay, so that's gonna be Monday. It's kind of like, okay, this is what I'm looking at for the week, right? And on Friday at 3 o'clock, I'm gonna be trading live with you guys as well, opening up the live stream. So it's kind of like I open up the market with you guys and I close the market, as we go into the weekend. I do a live stream then at 3 o'clock till market close. Okay, if anything changes though, if I can't make it, if I'm going to be late, if I'm not going to be streaming or anything like that, I'm going to announce it on my Discord. So that's why I say follow me on Discord. I just put that link up right there for you guys. Follow me, and you can be made aware if I'm not going to make it or anything like that, because it's really good for doing those updates. So Fubar just joined me on Discord, so I'm waving hi to you, my friend. Thank you. And like I said, that's where I'm going to be putting some updates, and I'll be, I just started this, so I'm going to be, getting more into it. I haven't really set it up just yet, but I have it set up for the most part that when I'm going to be streaming, I'm letting you guys know when I'm not going to make it and all that stuff. So again, the schedule is Monday at 10 o'clock, Friday at 3 o'clock for the final market of trading. And again, you guys can ask me any questions and all of that stuff. And I'm here for you guys to do any kind of reviews. We'll be doing some reviews. So just kind of going into it, I'm going to wrap up with this is, all of my positions so far. The only ones that are kind of acting up, not really doing too much, is Lynn and AMD. We'll see if I get stopped out on AMD. May get stopped out on this one. This one's kind of getting close. So we'll see. But we'll see how these play out for the week. And on Friday, I'll let you guys know what these things did. Okay. Hopefully a lot of these are still on my book, and they're even more green than they are now. All right. So hopefully that's the case. And we'll see. And the ones that get stopped out, like I said, I think AMD may get stopped out tomorrow. We'll see. Who knows? But that is it, guys. So you all have an amazing rest of the evening or night. We're burning the midnight oil over here. It was nice hanging out with you guys. My eyes are like kind of dozing. So, guys, appreciate it. As always, you're all amazing. I appreciate you guys coming in here and making the channel what it is. It would not be a channel without you guys. So thank you very much. And hopefully this stream helped you out somehow. Okay. Whether it was, whatever it is, hopefully it helped you out. Be careful if you were long. Be very, very careful. Okay. I don't want to see any of you guys losing money. So don't really make any sudden moves just yet. Let's see where the market wants to go before we get really excited, especially if you're new. Okay. So just kind of be careful. Don't trade too heavy unless you've experienced. But, I don't want to see any of you guys losing money. I want to hear about all of the winners we got, and the losers are small. So if you do get hit on some of these trades, just make sure it's small, guys. Make sure it's a 5%. 10% is really stretching it, but make sure it's small. Okay. And don't carry these losers. My advice to you guys, this is my advice, not financial advice, but my personal advice. Don't carry your losers. Okay. If you're wrong, make sure it's just a small amount, because you could always, you can make it back, but it's hard to come back from a big loss. It's very, very hard to come back from that. So peace and love, guys. Appreciate you all. Also, last thing, if you're not following me on YouTube, do me a favor, guys. Go on YouTube and follow me. That I'm just starting to try to build that up, but I will be doing video posts. So I'm going to be streaming again on Mondays and Fridays, but I would like to do maybe 2 or 3 video posts, posting thoughts, posting market psychology, just little quick, maybe 2-3 minute videos on market psychology. And those are not going to be streamed, obviously, but they will be posted. So again, if you're following me on Discord, I'll inform you. I'll let you all know. But yes, try to go to YouTube, because I have like a very pathetic amount of followers, guys. I think I'm like at 50 followers. I don't even know. I'm not even at 50, maybe 20. So the more followers I get on YouTube, the better. If you are on YouTube watching this, follow me, please. Okay. Help me build the channel. Appreciate you guys, especially if you're trading. Peace Dash. I will continue to trade these options, man. I'm gonna be trading options for the at least for the next quarter. Okay, so I'm looking a good 3 months to try to trade options, give them a good run. Okay, really manage them, and not get too crazy, but a little bit, and test these options, because a lot of you guys, that's all you're trading. I know I'm not going to convince you guys to to buy shares, even if it's a small amount of shares. But if I can learn how to play these options the way I'm playing my shares, that's just going to help me out, and that's going to help the community out. It's going to help you guys out. So I will continue to play these options. Like I said about options, I'm probably going to just get some of these stocks that I would not normally buy, stocks that are $15, $10, something like that, I may just buy a contract because those options are not that much compared to like a stock that's like $200, $300, $400. Those, you can get like $1,000 option. That's expensive. Okay. That's expensive. You don't want to, be wrong and have that whole thing go wrong. I'd rather, put $100 or $200-$300. That's better than $1,000. You could, if I can play 3 options for the price of one, I'll take that, every day. So, I may do that on some of these, lower price stocks. You said I always had, awesome risk reward trades with options. Yeah. Yeah, the trick is, I think, with if you have a good risk reward, that's great. Now all you have to do is aim for consistency. That's it. Just keep trading, and every week, you really want to do it every day, but at least every week, tally it all up. Okay, tally up all your trades. Look at your options and see, what was your largest winner. And what was your largest loser, and just kind of tally it up. That will tell you if your winner is huge, and then you're getting consistency. If you see this happen week after week after week, like what this is what I'm aiming for, then that's going to tell you everything you need to know. That's going to tell you that overall you're becoming a good trader. Your losses are smaller than your winners. Your winners are good. So first thing is that the risk reward. Second is that consistency. That's it. It's really not so much the win rate. You could make a killing just being right 30% of the time. A lot of people at first, especially beginners, are like, well, I don't get it. How can I do that? It's a matter of just your winners being that much larger than your losers. When you're you lose a trade, it's like maybe, for me, shares, it's like 2-3%. But your winners are 10%. Your winners are, even double that is great. You know what I mean? So with options, that's the same thing. That's what I'm aiming to do. And I'm not going to be able to see that until I do this thing week in and week out. So last week was really good for my options. It was really good. But it's, again, look, these options are still here. My 3M, Coke, Comcast, Starbucks, FCX, these are all still open. Okay. So they could change. So I'm really not going to know until they're closed. That's when you really know whether because that's when you could, that's when you can judge your option. If you close, then okay, what is my average winner? So these are still open. These can still go wherever they can. Who knows what they'll do? So after a few weeks of trading, after a few months, then I'll be able to gauge really nicely after I have a nice amount of trades. I would say at least 50 trades, 50 options. If I can take 50 option trades, that's plenty to kind of give you a confirmation whether you're building your account or you're slowly, bleeding your account. 50 trades for me on options, that should be enough. That's kind of like what I'm mentally gauging, that I'm going to need to take at least 50 option trades for me to know whether this is a winning game or not. I don't know. So we'll see it. We'll see what it's like. So, but again, peace and love, guys. Appreciate you. And hopefully we're able to even tell the difference with this new microphone that I got, because I'm loving it, man. It was time. So hopefully the audio is much more is better and nice and clear. Sounds great. Cool. Yeah, it's like I said, man, it's radio quality, so I like it. But 116 over here, man. So I am out. You guys take care. You all be safe in the market. Okay. I will be, I'll still be popping in on Twitch and going into some of the channels and whatnot. So I'm sure I'll be, bumping into you guys and whatnot. As always, you can send me a message, DM over Twitch, or if you're following me on Discord, whatever you want to, you have whatever you want to talk about, drop me some lines, chat in the Discord, and we'll continue to build there. And hopefully this is helping to build you guys up as well. Because, you know, it's if we all can eat as a community, that would be great. Okay. The only way I can do that is just by being transparent, showing you guys what I'm doing and why I'm doing it, and explaining it. And hopefully you guys can learn from that. So peace and love. You all have a good night. And I'll catch you on Friday at 3:00 right here. And we'll see how everything is going at that point. Hopefully we're all in the green. Okay. So you guys take care and have a good night. Peace and love. Peace and love.